इन्वेस्टर्स वेलकम टू एसओआईसी। तो आज के इस वेबिनार में या आज के इस बिजनेस एनालिसिस में वील बी लर्निंग अ वेरी वेरी इंपॉर्टेंट स्किल। इस स्किल का क्या नाम है कि आप अपनी जॉब और इन्वेस्टिंग के बीच में कैसे बैलेंस कर सकते हैं। सो दिस इज वन ऑफ द क्वेश्चंस व्हिच आई हैव रिसीव्ड द मोस्ट ओवर ईमेल। एंड कभी कभी मैं इस ईमेल का रिप्लाई भी नहीं कर पाता क्योंकि इसका रिप्लाई काफी बड़ा हो जाता है, क्योंकि इसका रिप्लाई एट द एंड इज लिंक टू टाइम एलोकेशन एंड आपके ब्रॉड ऑब्जेक्टिव्स के इन्वेस्टिंग के। तो एक्चुअली मैं आई थॉट कि इस क्वेश्चन को आंसर करने के लिए व्हाई नॉट कंडक्ट अ वेबिनार। एंड इन दिस फेस टू फेस मीटिंग व्हाट वील डू, इसकी जो रियल लाइफ प्रैक्टिशनर है बाय द नेम ऑफ मिस्टर साहिल शर्मा। एंड एक्चुअली मिस्टर साहिल शर्मा वर्क्स एट गूगल, एंड गूगल के साथ काम करने के बावजूद भी ही इज एक्चुअली इन्वेस्टिंग हिज मनी इन अ लॉट ऑफ स्मॉल कैप्स मिड कैप कंपनीज। एंड ये कैसे उनको रिसर्च करते हैं, क्योंकि रिसर्च का इनमें बहुत ज्यादा फैनेटिसिज्म है। सो पूरे वेबिनार में हम लोग यही बात करेंगे कि आप अगर आप जॉब करते हैं या अगर आप कोई बिजनेस भी करते हैं तो साथ साथ आप इन्वेस्टिंग को कैसे बैलेंस कर सकते हैं। एंड अपार्ट फ्रॉम दिस थ्रू आउट द वेबिनार आपका क्या फोकस रहना चाहिए कि जो साहिल शर्मा है वो अपनी टाइम एलोकेशन के बारे में कैसे बात करें। एंड इसके साथ साथ ऑल दीज वेबिनार्स आर अ पार्ट ऑफ एसओआईसी मेंबरशिप। तो एसओआईसी ट्राइब मेंबर्स के लिए हमने ये वेबिनार ऑलमोस्ट 2.5 मंथ्स पहले कराया था। एंड ऑल ऑफ दिस इज इंक्लूडेड इन द एसओआईसी मेंबरशिप। थैंक यू सो मच फॉर जॉइनिंग अस। होप टू सी यू इनसाइड द वेबिनार। Welcome to each and every one of you for a session on how to balance between a day job and research work. And Sahil Sharma is a very engaging and enthusiastic young investor. And you can just check out his thread on Value Picker, which is a gold mine of information. And you can also read his experiences, that how actually by investing in a bad company he got that passion, and he got extremely basically he became extremely enthusiastic to find out these hidden gems like RACL, Geartech, or basically more and more companies like Mastech also. So then that gives you an indication that these things can be done. It's not just that only institutions have the advantage, but normal retail investors can actually thrash institutions if you are passionate enough. And I personally met Sahil like 4 or 5 months ago, and Sahil came across as a very very deep thinker, and basically we are extremely grateful to have Sahil over here. Over to you, Sahil.
So yeah, first of all, thanks Ishmohit for the kind introduction. I had very similar kind of thoughts on meeting you. In fact, it's very hard to find people who think that deeply, and at least in my view, when we find them, we should always engage more deeply and try to learn from each other. In fact, that's one of the reasons that I write on Twitter, is so that I can find more such people to engage with. Anyway, let's come to the topic on hand, which is how to balance between a day job and equity investing. Uh, I'm going to have a very short presentation so that we have a lot of time for Q&A. Also, in the middle, if people have questions, please do feel free to interject at any point and ask the questions. Just to quickly talk about what the outline will look like, uh, what I've tried to do is to talk about a few investing principles first. And I hope everyone can see the second slide, which is the outline slide. Let me know if you can't. I've talked about a few principles that sort of govern this paradigm of how do you balance between things. Then I've talked about some practical aspects, sort of how does it impact the type of investing that we do. What does a random day in my life look like, arbitrary day, and also some practical learnings that I have been able to take out of this balancing act. So to start off with some very important disclaimers, I am not a SEBI registered analyst or advisor. Any companies that I talk about are only to be taken as a sort of a educational experience and something that I'm doing to share my experience. They're not to be construed as any kind of investment advice or buy sell recommendation. I do own some of these companies. Another thing to point out is I only share knowledge in the hope that the reader or the listener will also end up doing something similar, doing research of their own, sharing back with me, and I'll be able to learn something from them. So that's sort of the only motivation really. Last disclaimer is that I'm still a beginner in all of this, so a lot of things I talk about I could be horribly wrong in them. So it's very important for everyone to try and build their own conviction and look inside them to try and understand sort of the truth of everything. So let's talk about the first slide, which is, practice makes the human perfect. Practice makes the perfect human. The reason I've talked about this, and we can see the quote from Warren Buffett, which is the chains of habit are too light to be felt until they are too heavy to be broken. Reason I've talked about this is sometimes what we see is only the tip of the iceberg. We see sort of what's on top, uh, the outcomes. What we don't see is the process, or like what went behind the scenes to make that outcome happen. For example, if I'm able to balance things right now, that is because a lifetime of experiences and habits have prepared me for this. So that's sort of where I want to start the presentation and talk about some of these balancing acts that I've been performing throughout, because that's what prepared me for this. And it's important to realize this, because it's easy for us to think that, I want to be able to achieve this kind of balancing tomorrow, right? It's very hard to actually do that in practice. A more realistic thing would be to set some goals for ourselves, that maybe a year down the line I want to achieve very good balance, but in that year I'm going to ramp up to that good balance. Talk a little bit about school. um, I was always a curious student. I was someone who really liked studying things, going to the depth of every concept. Um and this took sort of three different paths in school. There, basically, all of you might know Olympics, where athletes compete. In a similar kind of thing, we have some kind of Olympiads for these different subjects: mathematics, astronomy, chemistry, physics, and so forth. Uh, and basically, I found them very interesting. And what happened is, I was kind of Googling hard math problems or something like that. Google landed me upon something known as a RMO website, Regional Math Olympiad. That's where I sort of became very interested, because, like, generally, if you remember, your school papers would have something like 30 questions in 3 hours or something like that, roughly. But this paper had like 6 questions in 3 hours. So I thought that, this is very interesting. Like, how can you have only 6 questions in 3 hours? I started trying to solve it, and then I realized I couldn't solve even one. So that was a starting point, that okay, I need to do this more and understand the truth of this, like what's happening here. So that was one thing. Another thing that ended up happening is, in 11th class, what I realized is most people that are interested in math and science are opting for basically, studying for IIT. So that's something that, I also started doing. I started preparing for IIT in my 11th class. At the same time, when I attend something, I don't feel good about, not doing it properly. So when I did attend school classes, I still felt that, I had to do well at school. So even in English, I would want to get good marks. The point is that, I had to balance three different streams in school. And this is sort of like initial experiences that prepared me for the balancing in the later part of life. So similarly, if we look at college, something very similar sort of thing was happening in college. One is the college courses, and I would say they are fairly difficult, especially if we want to get good marks. I've always been someone who wants to sort of do everything perfectly, so I always felt that I had to get good marks. You don't always end up with good marks. You might feel like I could have done better, but you want to get good marks. That was one. In parallel, there's this thing called academic research, where the idea is that uh, humanity has some knowledge and we want to expand that horizon, right? That is basically what academic conferences do, that people try to find new truths that exist but we didn't know about them. And this could be applied research also. It doesn't always have to be like fundamental research, but basically I did some of that also in college. And it's, as you can imagine, extremely time consuming, because sort of the easy truths have mostly been plucked out in most fields. What remains are kind of hard truths. Takes a lot of time, months. For the easy problems it takes months. For the very hard problems it takes decades. I know of many scientists, not personally, but like read about them or heard about them, uh, who have taken decades to get to the truth of a situation. So, clearly these are hard problems. So that again called for a balancing act, that should I focus on the research? Should I focus on the college courses? There's a balance to be struck there. If at all, we can add a third thing, which is social life and hanging out with people, although I didn't do a lot of that in college. So then we come to initial part of professional life, which is my job at Google. And even inside of that job, there's a lot of prioritization that is to be done. Um, the reason for that is generally engineers, as you go up the ladder, not only engineers, my guess is all professionals at large companies have to try and balance different things, right? For example, you might be working on many different portfolio of projects. You have to balance between those projects. And in fact, what I've been able to understand by looking at things is that the higher up the value chain we are, sort of higher up the management chain we are, the more we are paid for that quality of decision that we have taken. As an example, any CEO at a company would be paid for the kind of decisions that they're taking, the capital allocation decisions, what kind of acquisition to make, where to put money. For example, in the previous, the SOIC live event, Ishmohit was talking about Mastech and about Microsoft Azure growing 50% quarter on quarter. I did watch a little bit of that presentation before I sort of was doing other things. So in that, what we have to understand is that the Microsoft CEO would have to figure out how much capital to put into Azure, how much capital to put into Windows. All of those are capital allocation decisions, right? And they call for prioritization because at every point in time, there are more ideas than there is capital, right? That's how it is generally. And that's the case for everyone. That's the case for every human being, including CEOs, including companies, which are organizations of humans, including investors, and including random humans. And we'll come to that in the next slide, like how are random humans involved in all of this. But what I have sort of shown in the diagram is that any engineer, right, and any professional for that matter, we have to sort of take the current state, look at the different options we can take, and take a high quality decision. And the more we are able to take those high quality decisions well, correctly, the more we sort of end up progressing up the value chain or the management. So let's come to sort of the same kind of brutal prioritization and how it happens at companies, right? For example, let's look at Infosys. Uh, Infosys is, I think, trading at a PE ratio of 35 or 40 or somewhere around that mark, I think 35 to 40. So now the management has to decide, should we do buybacks or should we hire more people, try and do some kind of acquisitions, right? These are different kind of capital allocation decisions that these managements can take. Uh, and if you look at Astral, right? Astral also had these options, these kind of options. Should we consolidate the pipes industry? Should we enter another completely different vertical called adhesives? In what proportion should we allocate capital? How much should go to adhesives? How much should go to consolidating the pipes industry? If you look at one of the companies I'm invested in, IDFC First Bank, again, the clear options in front of them are, should we continue to do the unsecured loans that we were doing as capital first? Should we do more of home loans? Should we do more of corporate loans? And all of these are sort of, brutal prioritization decisions that companies also have to make. So what we have seen is a student has to make these decisions. Uh, a professional has to make these decisions. Companies have to make these decisions. So now let's come to sort of how this ties to everyone's daily life, right? And that's where, again, I think like my hypothesis is mostly capital markets reward having insight into truths, right? And look at Elon Musk. Like, one might wonder, why is he the richest person on earth, right? Just look at the beauty of that truth. Time is the ultimate currency. That's it, right? And the reason that that makes a lot of sense is that the only thing that you can't buy with money is time. uh, to an extent, right? Like all of us would want to have a healthy life and all that, but beyond an extent, you can't. And that makes time the ultimate currency. And I take it one step forward to say that it's the ultimate commodity and the ultimate type of capital. So, at least to my mind, capital allocation is equal to time allocation. And if you think about it, money is just a distillation of capital, right? How did you get that money? That was through other time allocation decisions. Should we put more time and more of our efforts into, let's say I am Praj Industries, right? And that's a company I'm studying these days. So that's why the example. Praj would have the question, should we put our time and energies into developing compressed biogas, into developing ethanol, into developing co-products for these processes, which endeavor should we pursue, right? It's mostly about time allocation. Once you have done time allocation, then you do capital allocation on top of it. So at least to my mind, they are sort of very intertwined with each other. And this is also sort of the way in which all of this ties to all of our lives, because all of us are always making time allocation decisions, whether or not we realize it. Whenever we say that we are busy, effectively what it means is that we are prioritizing something else, right? If someone called me up and said, Sahil, can you pick up? I would say, no, I'm busy. That's because I'm prioritizing being in this webinar. And in that way, time allocation is equal to brutal prioritization, and everyone has to do it, from companies to CEOs to professionals to each and every person. So I think the key takeaway that I want you to take away from sort of that part of the slide deck is that there is no way to avoid brutal prioritization. Like, all of us have to do brutal prioritization. There's no way around it. It makes sense for us to do it in a conscious way, for us to be very aware of the way in which we are prioritizing and allocating our time, rather than it happening to us. What I've seen is most people have life happen to them, in terms, especially in terms of prioritization. And ones that are able to kind of make their own narrative and decide how their life should turn out are the ones that are able to do well. So, as a clear example, right? Uh, I think Ishmohit has talked about this. For example, like when you're starting a YouTube channel, right? It's not easy in the beginning. When you're making the initial videos, it's not like you have a huge audience, but still you need to keep, that motivation level high, and do that time prioritization, time allocation, that brutal prioritization, that this is the right thing to do. I am going to allocate time to this, and let's care about the rewards later on. I'm going to do the right thing. So I think in that way, like, all of us have to do brutal prioritization. That was sort of the first part of the presentation. The second key aspect I want to talk about, and in this I'll use some computer science concepts, and I'll give a very easy example to explain them, is the concept of parallelization. Uh, so there are lots of words on this slide deck. I want you to not look at them and only look at the picture. What you see in the picture is Windows XP. Windows XP startup menu, right? I hope all of you would remember Windows XP. Uh, this was my first computer. It was when I was in 6th class. I think that computer had, if I remember correctly, 256 megabytes of RAM, and I think 30 gigabytes of hard disk, and a single core processor. The fascinating thing is that that computer with a single core processor was also able to do parallelization. It was also able to run multiple processes. I could listen to music, I could browse the internet, and I could do both of these things together. In fact, I remember one of the things that I loved doing was playing GTA Vice City or GTA San Andreas while also listening to music of my own choice, because I didn't like the music that they played. So the point is, a single core processor is able to do that. So let's try to understand, like, what is a single core processor and what the hell am I talking about? So the thing is, uh, all the programs that you see running on your mobile phone or your computer have to be physically executed by some hardware, right? That's sort of the basic principle, that anything that you see, let's say you're opening a Chrome tab, that has to run somewhere. That is code, and it has to run somewhere. Some hardware has to run that code. And the thing is, earlier computers used to have a single core. What that meant is that basically there was a single set of hardware. So you couldn't really run multiple processes in parallel. You couldn't really do that. And still they were able to create the illusion of parallelization, even with a single core processor. That's the sort of the key takeaway. And the fascinating thing is, if you think about our mind is also a single core processor, because at a time we can only think about one thing. Try to think about two things at a time, you will find it extremely hard. You might be able to switch between the different thoughts at a frequency, but you can't think about two things at the same time, which is why I've said that the human mind is a single core processor. We have just a single CPU, as they call it, inside our mind. So the question is, if a single core processor can multitask, can we also multitask? And you'll find a lot of literature which says that multitasking is not good. We are unable to sort of do well. So the question is there a way to do multitasking in a way that we are able to remain effective? And if we can, then that will increase our throughput, right? So let's look at that. So let's first of all take some examples of this parallelization that I talked about from my own life. The picture you see of me is essentially wearing headphones and sweating a lot because I do a lot of morning exercise, morning walk, jogging kind of thing. What I do is I listen to con calls while I'm cooking and also while I'm doing morning walk. That's a type of parallelization, right? Now, let's try to think about why I'm able to parallelize that. The answer is that the act of walking or jogging actually does not require your conscious thought process. You're able to do it in a way that you don't have to think about it. So I'm able to parallelize my walking with my listening to conference. And it obviously helps that there's a park near my house and like I don't have to fear about any vehicles hitting me. And of course, like if you are going to try any of this, please don't do it just because I'm doing it. Figure out your own circumstances. For example, if you're living in a place with a lot of vehicles near you, you might find it very hard to do this. You have to think about it. You have to be thoughtful. In my case, there's a park near my house and sort of it's guarded and walled, so I don't have to worry about any vehicles hitting me. So I'm able to walk and listen to call calls, and in that way I'm able to parallelize. So I get health and knowledge together. And similarly for cooking, right? I love cooking, but the thing with cooking is, let's say you're cooking a very small set of things. There's a set of things I've figured out over life that I like, and I know how to cook them. I've cooked them hundreds of times. Now, when I'm cooking them, I don't have to think about it. I can sort of cook it sort of on intuition or on muscle memory. That, you know, first you put some oil, then you put some masala, and so on and so forth. So in that way, I'm able to parallelize. Now, another very important thing I want to point out is the power of repetitions. Why is this important? Some people will tell you that, you know, reading is better than listening because reading gets you more retention, and I completely agree with that. That's what I've seen in my life as well. In fact, what gets you the highest amount of retention is actually writing. So sort of listening is the least level of retention, then it's reading, and the third and the best level of retention is actually writing. If you write, you retain a lot. But the thing is, all of us have busy lives, so we have to make trade-offs, right? That brutal prioritization I talked about. So I find very hard to make concrete time, like time set aside just for writing and reading. And so I try to parallelize the rest of my life as well so that I can gain something. The idea is, and in a lot of these places, I would listen to the con call at 1.5x or 1.25x. In fact, I can share another interesting thing, which is I also listen to Ishmohit's videos, all of them, but I do so at 1.5x because that's how I'm able to sort of do a better time allocation. It's true that I might not be able to retain all of it, but the hypothesis is that if you're able to retain most of it, we can always come back for details if we want to come back for details. So I think that has worked pretty good for me. The only exception would be if it's a new con call, if it's a new industry where I know absolutely nothing, I might listen at 1x because I don't know anything about that industry. But since I'm able to ramp up, let's say I read the con calls of Avanti Fields, I listen to the con calls of Avanti Fields, I probably might do it at 1x. But then when I'm doing it for Apex Frozen Foods, then I will probably listen at 1.25x. If I'm doing a third company, I might listen at 1.5x. And that's also the way in which our knowledge, not only our knowledge compounds when we study more companies in an industry, but our efficiency compounds as well. Our ROIC or ROIIC, where the C is the time, because I'm investing time, also goes up, right? It's sort of brownfield capex, as Ishmohit talks about. It's a brownfield capex of time allocation. You can listen to a third company's con call probably at 1.5x and still retain a lot because you already have a good model for what they are going to say. The reason I've talked about the power of repetition is that people talk about the repeat value of music. Obviously, music has very high repeat value, which is why music streaming is such a great industry. Books have good repeat value for many people, and I respect that a lot. But for me personally, con calls have a lot of repeat value because there's so much new information to learn, and I'm always happy to listen to a con call a second time if I need to. It helps sort of see new things, sort of recap on things if I need to, and so forth. So another sort of type example of parallelization I want to give from my life is something I do at work, which is
Hi investors, welcome to
oh
SOIC.
sorry, my
तो आज के इस इंडस्ट्री
computer,
एनालिसिस में
my
हम लोग जो इलेक्ट्रिक
mobile
व्हीकल
got
इंडस्ट्री है
triggered.
इसका
Just
एनालिसिस
give me a
करेंगे,
minute.
साथ साथ हम ये देखेंगे कि इस इंडस्ट्री के अंदर ऐसा क्या हो रहा है कि जिसकी वजह से बहुत ग्रोथ आ रही है, क्या आप
The top 10 electric video got triggered anyway. So the third thing is while I'm running code, I also work on the slides. And that is a parallelization that's really efficient because when you're running code, it takes a lot of time to run code. You might start running the code right now and it might take 5 minutes, 10 minutes for the code to run. Now I have an option. I can sort of sit and stare at the screen and do nothing, or I can work on my slides. So if I'm working on my slides, then I'm sort of utilizing my resources in the best way possible. So that's a third type of parallelization. And the idea there is, and I'll come to this in the next slide, sort of the technical name for it. But the idea there is that if there is a hardware resource, in this case, the mind, it doesn't make sense to keep it empty or sort of uh, not use it to the optimum capacity utilization, right? It makes sense that if one of the things that I was doing, in this case, running code, is sort of executing in a different computer, not in my mind, because I've already written the code and it's running on a different computer, then it makes sense for me to do something else with my mind. Maybe I need to work on the slides. And this requires a good habit that all of us have to develop, which is called context switching. And again, it's sort of a muscle memory or a kind of a habit that we can develop over time. The idea is, can I actually work on multiple things while switching my context between them? And again, this is a skill which capitalism rewards very well. This is something that companies need to do. This is something that professionals need to do. And this is something that, in my opinion, everyone needs to do. Uh, and the better we are able to develop this skill through practice, the better it is for us as professionals and also as humans. So let's come to the core principle that is behind some of these parallelizations, not all of them. The core principle is known as pipelining. And I'm going to explain it. You don't have to either read or look at the diagram. I'll explain the diagram as well. But for now, just follow along on my example. Let's imagine a company and there are only three employees, me, Ish Mohil, and Sajal sir. All three of us are employees at that company. We are working on creating research reports because all of us are passionate about research. What happens is maybe I sort of look at a company, I write a report, and then I hand it over to Ishmohit. He does his own research. He might add or delete some things to my report, and then he might hand it over to Sajal sir. And then Sajal sir does even deeper research, figures out the sort of the deeper truths, refines the report even more, and then he might actually sort of output it. What is this process known as? This process is known as pipelining. The idea is there is, even inside that single core processor, there is actually a lot of hardware resource that might lie vacant if you only do one product at a time. So the idea is to never leave any resource vacant. That is a core principle of pipeline. And let's see how that would work out in our example. Let's say that I worked on a report and then I handed it over to Ishmohit. Now Ishmohit might take a day to work on it. Should I just sit idle and do nothing? Probably not. That's not a good use of our time. I should probably start working on the second report so that we have an entire pipeline of reports, as they say. So I'll start working on the second report. Ish Mohit will work on the first report. He'll hand it over to Sajal sir. And then maybe I'll hand over the second report to Ish Mohit. I'll start working on a third report. He'll work on the second report. And in this way, the pipeline of reports will keep working. So this principle is known as pipelining. And this is something that happens at a very fundamental level in all of our hardware, all of our computer hardware. And this is the core reason that your Windows XP is able to do multi-processing. One of the core reasons. Of course, there are other. For example, like I said, the rapid context switching is another thing that those computers do. But this is another core principle, pipelining. The idea is that when code is being executed, it actually has to go through multiple different hardware checkpoints in order to finally be executed. So let's say in this case, instruction one is going over some set of hardware. While instruction one is in the last part, we can probably start executing instruction two on the hardware that is empty right now. So in that way, instruction two's execution starts even before instruction one has finished. So that's what this is showing. The T1, T2, these are all the time stamps. And what it's showing is instruction two can start executing even before instruction one is finished. All of these IF, ID, all of these are sort of acronyms for different parts of the hardware execution. For example, IF is instruction fetching. I'm not going to go into all of them because this is not a class on computers. But last one is OS, where finally it has to execute on the operating system. But the idea is there's a lot of hardware lying around, can we parallelize based on the principle of pipeline? If we can, then our utilization is best and we are able to do well. So if you think about the example of me listening to con calls while walking, that is a very similar example. There, the idea is that walking actually does not take any of the brain, meaning that walking is sort of in a different paradigm altogether. It's sort of the muscles and the second set of hardware, which is the muscles of the legs and so on and so forth. It's not using brain, which means I can use my brain for something else. So the point being that there are lots of parallels to be drawn between what we can do in our real life and between how a computer works. So I mean, if you think about it, humans are biological computers in my view. Let's go on to the next one. So let's try to understand how, like in the first or the slides until now, what I've tried to talk about is different ways in which we can increase our efficiency, uh, sort of to try and do the best that we can. But now let's try to understand that given our constraints of the fact that we are all professionals, what kind of impact that has on the type of equity investing that we do. So on the left side, what you see are the defining characteristics of our condition. And all of us would have this in different proportions. So sort of this is covering the top level headers. And all of us would have different proportion, in different proportion, we would have all of these constraints. But before I go forward, I just want to pause for a second to see if there are any questions. Otherwise, we can continue. Ishmohit, can you just see if there are any questions? Otherwise, we can continue.
I'm just opening the chat box if there's any question.
Yeah.
Right. If you have any questions, you can ask in the chat box below. Now, after this, anyway, Sahil, we'll have a round of question and answers. If you want any engagement sort of, so someone is asking best website to read con calls, like which tools do you use?
So in terms of they are quite funny questions as well. In terms of con calls, I used to love ticker.com, because it allowed me to read it on my mobile phone, very mobile friendly format. But unfortunately, they have a very high pricing model now. It used to be free. It's paid now and very expensive. So I don't have their subscription anymore. I can still read con calls, but only for American companies, not for Indian companies. So that also gives me some bias to study American companies, because I can read their con calls easily with ticker.com. Apart from that, like most companies do upload their con call presentations, and we can find it on every website. I think StockEdge has it, Screener has it, uh, but uh, I used to prefer Ticker, but now actually I just download it from anywhere. Mostly it's StockEdge or Screener.in.
Right, right. We are actually in touch with the Ticker guys to get something like at a lot of discount for all the SOIC members. Let's see what they react to.
That would be epic. And yeah, I firmly believe that like most of these companies should think about the Indian use case also, and like the fact that we don't have the same earning potential as the American people.
So Sal, one more question is from Praful. So what is your process for connecting the dot for things that you read, that you basically read during the day?
So I think like one thing to sort of have, which I haven't yet talked about a lot, because that's not what the presentation is about, is the element of curiosity. I think we shouldn't have the mindset that everything we read will directly lead to financial gain. For me, I'm very curiosity driven. I try to go into the why as many times as possible. In fact, if you might have interacted with a kid, you would have seen that kids also keep asking why. And what you figure out is that at some point you end up saying because I say so, which is our way to end the conversation. But the more we go into the why, the deeper we go and the more connections we make. And there is actually a lot of fascinating connections we can make if we do that. For example, you will find probably a lot of people talk about pity engineering. But to me, the interesting part was to figure out the fact that what is the physics behind why their product is needed. And finally, I could connect it to something I had read in school, which was Faraday's law and Lenz's law. So I think the point being that, oh, sometimes things will connect even when you don't. So the thing is, I'm not seeking connections, they happen automatically. If you read enough, at some point, things are bound to just hit each other and you make a connection. It's not something you can consciously figure out that this is a connection.
Right, right. This is actually reminds me. So I have a 3-year-old nephew at home. He's constantly bombarding me with questions. Right. So
Yeah.
it's quite interesting to notice as well. So one more question is, how do you? So this is actually my question as well. So how do you handle interruptions? Suppose you're deeply engaged in a task and you need to leave that to handle one more task which just popped up. So how do you sort of do the like context dependency, or how do you change the context?
Yeah. Thanks for bringing it up. This is another core concept I was sort of slightly referring to it. This is known as context switching. This is again something that computers do very well. This is another reason that your Windows XP was able to run multiple processes. It's actually not running all of them together. It's doing a sort of parallel switch, meaning it's running one of them and then quickly switching to the other. It might run one for 100 milliseconds, then the other for 100 milliseconds. The thing is, this is sort of a habit that we have to develop. And I think the only thing I can say is to uh, essentially have as much practice as possible, because beyond that, again, I'm unable to figure out why is it that some people are better at it, others are not better at it. The only thing I can see right now is habit and sort of practice, right? In my case, again, like the person rightly said, my professional job, Google, requires a lot of context switching because I have to guide maybe 5 to 8 engineers. So that literally means that I have to talk to 5 to 8 people, sometimes in parallel, but definitely at a very high frequency. I think that helps a lot. So if someone really wants to try it, just try having a conversation with 4 people. Just have your parents and your siblings, everyone over. Try to talk to all of them, but interleave it, meaning say one dialogue here, then say one dialogue here. You might have seen chess grandmasters have this thing where they play chess with 8 people together. They're doing a very similar thing. I think all of it at the end of the day comes down to practice. Like we have to practice it. That's the only thing.
Right, right. So I think I'll just ask one or two more questions. Then actually this time what we'll do, we'll allow people to ask questions like in basically we'll तो उनको जो option होता है audio का वही दे देंगे. So you can ask your questions directly to Sahil towards the end. And just one more question. So this is key. How did you start initially? How understanding a business turned into? So I think this we can answer towards the end because second half of the presentation is totally towards this. So Sahil, I think we should get back to the presentation. Great.
Sure.
And any question that you want to ask the audience, you can ask. Any engagement that you want to have to the audience, you can ask. So it is totally like you can make it engaging any ways you want.
I want to ask. So I think people might have seen, in case some of them follow me on Twitter, that I keep posting a lot of polls. That's because I'm a very naturally curious person. Not all of sometimes they ask, why are you asking this? I don't have a ulterior motive, but my ulterior motiveless question: can people try to guess how many kilometers of walk I did this morning? So you can try to just randomly guess, and let's see at the end like what kind of answers. Maybe I'll just answer right now because otherwise it will be hard to scroll up. I can see 5, 7, 11, 12.
Someone say
My
20.
one person said 30. So yeah, most people are 100. So this is great. At least we have a diversity of opinion. That's very important. 300. I'm waiting for 1,000. No one said 1,000. But like yeah, practically it's very hard. But basically for me it was around 19 kilometers. So, but one thing I'll tell you why I'm bringing this up. Uh, we have to understand the concept of actions and consequences, and I'll talk about this later. But for example, I want to reduce my weight, right? But I still had a pizza yesterday. So the only way to get over it is for me to burn it. That's the law of actions and consequences. And this is something which everyone that practices this says, for example, Virat Kohli has said this again publicly that he likes having chole bhature, but then he hits the gym immediately after that to burn it off. So I think that was very motivating for me. And yeah, that's why the question. Yeah.
Right, right. Interesting. Interesting. I think that gives me motivation to start like working out too again because last 3 days they've been very lethargic. Interesting.
Yeah. Yeah, I think on that note, like again, like Buffett said, right, it's about habit. Like habit, the chains of habit are indeed very light until we realize that they are very heavy, something like that. He has a beautiful quote. I'm not able to memorize it. Anyway, we can continue the presentation now if you're
Right, right. So let's get back. Right.
cool. I hope people are able to see my screen. I'm on the fourth topic, which is impact on the type of equity investing. Okay. So let's first try to understand what characteristics define the kind of situation that we find ourselves in as professionals. One is paucity of time, the fact that we don't have a lot of time. Second is we have many objectives to balance. And the interesting thing is the later we are in our life, there are more objectives to balance. More family, more dependents, partners, kids, parents, elderly parents, and number of objectives will always keep growing. Uh, we have a day job. That's what the topic is about. The talk is about. And finally, we don't have a lot of time to study, right? All of these are defining characteristics of the kind of place we find ourselves in. So let's try to understand what impact it had on the type of investing I ended up doing. And I think overall it has been beneficial. There are some drawbacks which we can't get over. I'll talk about that also. So the first thing is that if we are invested in a cyclical or a commodity kind of business, we have to pay extreme amount of attention on the supply side. We have to figure out at a very high level of granularity that how what kind of capacities are coming up in the global commodities at a global level. What is China doing? It's extremely hard, right? And to my mind, the focus on durable competitive advantages is an antidote to that problem, because the idea is that if we can find companies that have some competitive advantage, I can manage to or afford to relax a little bit in terms of how I'm tracking competition, because those competitive advantages exist. As an example, and we'll talk about this later also, but one of the companies that I'm invested in, RSCL Geartech, uh, sort of the factor that made it unique, that made me want to study it, was the fact that here is a company of 70 crore market cap, 200 or 300 crore top line, that has business from BMW, Kubota, and so many interesting brands, right? And to me, that was a starting point. That how is this possible that this small company has such great client relationships? And when I sort of dived deeper into it, what I was able to figure out is some of these Japanese clients, they have had now for 15, 20 years. I forgot the exact number. But the fact that they were the first auto ancillary to provide these gears to a Japanese OEM, and the fact that over time, this relationship has only grown. It has gone from one to maybe 100 components now. And the fact that for a micro cap to have this kind of sticky client relationship, it's sort of working at a different level, right? So these durable competitive advantages. In fact, again, if some of you might listen to con calls which I have attended, most of my questions are actually geared towards understanding the durable competitive advantages of the company. And to that extent, I also want to sort of acknowledge the role that Marcellus has played in my investment journey. They are another set of PMS managers that have an extreme focus on understanding the competitive advantages of businesses. And you can say that I have a very similar focus, except that it's sort of also sort of focusing on misunderstood companies or turnaround companies, not just on the ones which have a very established track record. So we differ a little bit in our process, but that focus on competitive advantages is there. I think that's important for professionals because we don't have the capability to invest the time into tracking commodity prices, commodity volumes, commodity capex every day. That's one thing. Second thing, again, this is something I think Ishmohit liked it a lot. I liked it a lot. Kenneth Andrade sir had a interview recently on Bloomberg Quint where he talked about the fact that valuation acts as protection for capital, and uh, thesis gives me the growth, right? Something like that. So I think again, it's extremely important to me that I'm invested in a company which is misunderstood or not well discovered, because that is what gives me the protection of capital. So most of the companies that I invest in, when I start investing, most people will just dismiss it by saying, no, no, this is not worth studying. I think that's perfectly all right. I'm happy with that. I don't want people to agree with me, because if they do, then I won't have the comfort of valuation. So most companies that I invest in will have that valuation comfort. What that automatically implies is companies with a, where most of the growth or a lot of growth is priced in, I don't find it comfortable to invest in those companies, because what we can see as an example, looking at the US tech bubble, is that uh, small things like, let's not say small, but like things which we might not be tracking, things like the US Fed rates can completely bust the bubble, right? If you look at some of the mid cap US growth stocks, they're corrected by like 60-70%. And I would not be surprised. Most people agree that specialty chemical in India is in some kind of a bubble in terms of the valuation. And again, just to be clear, no one is disagreeing on the potential, the fact that the industry can grow 10x in the next 10 years or some very large number. No one is disagreeing with that. The question is on valuation. Valuation is on what you have done in the past, not on your future. That's the growth part of the thesis. So, in my view, these specialty chemical names at 70, 80 PE is not something I can own, because to my mind, when I'm investing in a company, I want very high ROIC, where the C is the time that I'm investing. I don't want to invest in a company, then track it after 6 months, flip it, and things like that. If I'm invested in a company, I want to have a relationship for at least 3 years. And if they keep executing well, probably 5, 7, 10 years, but I can't see that much into the future. So my point being, I'm very valuation conscious. And the reason for that is I don't have a lot of time. I can't invest in a 50 PE company, then track the Fed rates and figure out what the Fed is doing. The third thing, a concentrated portfolio. Again, the idea is I have such little time that I can't really track 50 companies, read all their con calls, read their competitors. Uh, for actually to be able to have a 50 stock portfolio, you actually need to study probably 150, 200 companies, and not just on a one time basis, but in a continuation basis. Because as an example, for people that are on Value Picker, uh, a very good antithesis was presented for Loris Labs, and bulk of that relied on what the competitors were saying about the space. If I remember, Aurobindo and SMS Pharma were the ones mentioned. The idea being, for tracking one company, you actually need to track more than one company. So actually, the only option I have is to have a concentrated portfolio. If I have a very, very wide kind of portfolio, if I had 50 companies in my portfolio, I would have to track 150 companies just to track those 50. So that is something that has led to me having a concentrated portfolio. If I remember correctly, top 5 or 6 might be 50%, top 10 might be 75%, and total number might be around 14, 15, something like that. So concentrated portfolio. Uh, Another point is simple companies. So again, the point is, if a company is too complex with too many moving parts, too much to track, that is something that I don't find very well, or something that I like doing, because again, they are more complex to track. You have to invest more time. The ROIC, where C is the time invested, is much lower for the complex companies. That is part of the reason why I'm again very uncomfortable investing in very large tech, because I've said this again publicly that I don't think anyone can actually track what Microsoft is doing or Google is doing. Uh, it's like I'm invested in Google because I'm an employee. As a disclaimer, I am a Google employee, so anything I say about them is biased. But let's say Microsoft, right? I don't think I can track everything Microsoft is doing. It's too big now. So if I've invested in Microsoft, it's more like a sort of a index or a formula or a quant kind of investment, that let's invest in the top 5 tech companies. They will most likely end up doing well. I'm not comfortable with that. So again, I want to focus on simple companies, easy to understand companies to the extent possible. Another thing that I think, again, Ishmohit and I were discussing in our face-to-face meeting, is that if there are too many parts in a company, what tends to happen is that one of them ends up spoiling the party for us. So again, this is something that I've seen even in my own investment. So one of my big errors of commission, I think, was Strides Pharma. I looked at Stellis. I got really excited about Stellis. I still am excited about Stellis, but I think I paid less weightage to the generics business in Strides. And I thought that, I can invest in Strides. There is a valuation provides me some comfort, but it turned out that valuation was sort of not providing me comfort in the sense that uh, things actually became worse over time. And I think to me that exemplifies the fact that simple companies are sort of probably better for my portfolio at least, because as an example, in Strides, there are at least 4 or 5 moving parts. So one of them can spoil the party for you, and then like the entire thesis suffers. The fifth thing is tailwinds. So again, there's a lot of focus on moats that we pay, and rightly so. If you look at the first thing I've talked about, it's the durable competitive advantages. I do want durable competitive advantages, but I think tailwinds are underrated compared to the search for moats. So I think tailwinds are really important because again they give us some leeway in our investment thesis, meaning that if there are great tailwinds for the industry, the company might not execute very well, and we might still end up doing well because of the tailwinds. And there are many, many examples of this. Obviously, specialty chemicals is one, the whole China plus one tailwind, PLI scheme tailwind, and so on and so forth. But there are many others. The big one that comes to my mind is music streaming and digitization in IT. Tremendous tailwinds, extreme amount of market opportunity and traction, growth traction, plausible growth triggers. This is not like for example, you can look at auto and say that penetration is very low compared to China. I'm not making that kind of argument. What I'm saying is we can see on the ground that companies actually want to become digital, and a lot of them are becoming digital, and we can see that in the way that IT companies are growing, the way that they have their order books. Ishmohit talked about Mastic in the SYC video an hour ago or something. Mastic is one example. Azure is another example. It's a more direct play. Google Cloud and AWS, all of them are growing. All the cloud plays are growing. The point being, tailwinds, I think, is underappreciated and something that I personally pay a lot of heed to. I'm not very comfortable investing in a company facing headwinds and a company that is in a sunset industry, because of the fact that there's another problem with sunset industry companies. There are actually multiple of them. Let's talk about a couple. First is that the valuations can become much lower over time, because what people are trying to discount is a lower amount of growth or an advantage period for the company. We can find many examples here, but to be very honest with you, I haven't studied any of them very deeply, so I'm not actually pointing any names out. But I would say we should study all companies in coal, petroleum, and all of these industries to try and see how their valuations have panned out. As far as I understand it, unless they are reinventing themselves in terms of renewable energy, most of their valuations would just keep going down over time. That's one. The second problem with investing in headwinds is that it's very hard to see the terminal value of the company. So one of the things that I'm fascinated by these days is the way that our energy mix is evolving as a species and as a country. Uh, it used to be very heavily dependent on petroleum that we extract from the ground, on coal, petrol, diesel, and we are moving for sure from that to CNG, LPG, uh, compressed biogas, uh, biodiesel, ethanol, and electricity, right? Solar power, and that results in electricity. So we can see that switch happening. To my mind, the thing that is still a little unclear is to what extent, in the terminal case, would CNG, LPG, and all of these play a role. And primary reason for that, and even ethanol for that matter, primary reason for that is, at the end of the day, all of them burn fossil fuels. The only technology that is scalable as well, and I should not say the only, but at least the most commercially viable one, is solar right now. There are others for sure, like wind, like geothermal, like nuclear, but most of them are not, sorry, as commercially viable as solar. So my point is, anything to do with solar, I might still be excited, but things to do with CNG, LPG, ethanol are a little more iffy for me, because I'm not sure what the terminal value is. And what that means is, if I'm not sure, it's likely that a large part of the market might also be unsure, and the multiples can keep going down. Of course, we will have transitory kind of profit pools. For example, if you look at Praj, it's like the largest play for the ethanol story and the ethanol 20% blending target. For those that might be sort of unaware, um, government of India has mandated that all petrol run uh, vehicles have to have 20% ethanol in the fuel. So it can only be 80% petrol, 20% ethanol, and that has to happen by 2024. The ethanol blending until last year, I think, was 8% or so. So it has to rise 2.5x in a matter of 2 to 3 years. Clearly, there's a huge growth here in the short term. And you will find that in the way that the multiples for Praj are behaving. But let's remember that the fact that we have a paucity for time. So it makes me wonder, because for any company, what I want is at least the optionality of owning it for 10 years, right? And many companies fail that test, and that is one of the reasons that I would not want to own them, or I would be a lot more skeptical. And another thing that I want to point out is, at least for me, any company is worth owning at some valuation. So I don't believe that I should never own this company or something like that. It's a question of the valuation at which you're buying this company. So if a company making ethanol or CNG was available at a price to earnings ratio of 2, I would probably buy it, because that's just too low. And it feels like 2 is not the right thing, right? And unfortunately or fortunately, a lot of valuation, especially that multiple aspect, is a little bit based on patterns we have figured out, but that are hard to explicitly quantify. So my experience of reading about companies is, no company trades generally at a multiple of 2, not even the ones in Sunset Industries. Look at the cigarette companies, they don't trade at a multiple of 2. At a multiple of 2, I would probably buy. But at a multiple of 20, I would be a little skeptical, even if there is good growth. So that's tailwinds. Let's talk about longevity of growth, profitability, instead of pop in profits. So I think the key point I want to make, I come back to an earlier point I made, is that for any company, I at least want the optionality of owning it for 10 years. There has to be at least some scenario, plausible, probable scenario that I can think of. Whether that scenario actually turns out to be how reality is, I don't know. But there must be at least one scenario where I'm able to see a longevity of growth. Whether it actually ends up growing for 10 years, obviously we can't predict, but I want that optionality. The reason being, again, as I said, I have very little time to study companies. It's very hard to even maintain, sort of track the 15 companies I own and their 25, 30 competitors. So in addition to that, having a very high churn is extremely hard. Now, some of you, if you might have followed me on Value Picker, might point out that in the last 1 or 2 years, I've had very high portfolio churn. I think in the last year it has been less, but the year before that it was very high. So one thing I want to point out is, these things are sort of a function of the opportunities presented by the market. So at this moment where literally everything is at a high valuation, it's obviously much harder to do churn because you don't have those mispriced opportunities, or they are very rare. But I would say in June 2020, I would say every company was undervalued. So you could invest in one company, you would study one company, you would find good growth, good undervaluation, invest. Then you would second study the next one, you would figure out that it has even better growth or even higher undervaluation, and you would invest in the second one. So my point I'm making is, portfolio churn is a function of the kind of market we are in. If most companies are overvalued, churn would, at least for me, be very naturally low. And sorry, that's how I generally want it to be. Let's go on. So let's talk about one point in more detail, because I think this is a really, really important point to make, uh, which is the fact that for professionals, there is a lot of capital that we get to deploy every month. And this is especially true for young professionals, those that might have 2, 3, 5 years of jobs. Of course, those that have 20 years of jobs might not face a similar problem, because their annual savings would be much smaller compared to their large corpus of savings, provided that they've invested it well. But for a young professional, annual savings can be as high as 30% of the corpus, right? Which means every year you are getting 30% new cash flows that you need to now deploy. So what that means is that since I have a continuous flow of capital, it is extremely hard for me to own a company at very high valuation unless I had allocated a very high amount to it initially and I see good returns on incremental invested capital. So this theme that you'll find across many different uh, parts of life is the concept of ROIC, which Ishmohit also talks about in many of his videos, the return on incremental invested capital. The return on incremental invested capital for the company should be very high. Return on incremental invested capital for the investor should be very high. I should not put my money with the same kind of conviction at a multiple of 5 and at a multiple of 100. That would be sort of a, in my opinion, it would be a wrong way to invest, because when we are doing that, investing at 100 multiple, you're paying up for 5 years of growth. If that growth does not pan out, you make very bad ROIC on the incremental invested capital. And the third thing which we had talked about earlier is, for any random person, we can think of time as a capital, and we can think of the return we are getting on our incremental time that we are investing. And the fact that when we are studying a third company in a sector, we can actually listen to the con calls at 1.5x and have a better ROIC. The point being, we should always chase ROIC in as many aspects of our life as we can. So the point that I was making here is that I have a very big valuation consciousness or bias. Reason for that being that, let's say I deploy some money to a idea, right? And the company valuation goes through the roof. How much money can I deploy to it the next month or 2 months from now? That's the question for me. If you take the case of Sequent and Polymedicure, Sequent is facing good headwinds now. When I say good, I mean from the perspective of a long-term investor, this is probably good because it allows us to own a good company at a reasonable valuation now. Uh, of course, in the last few days, it has done well. But for example, Sequent had gone to 300, from 150 to 300, back to 150. Now it might be back to 225. My point is, when it was at 300, I felt that for the quality of company we have, that multiple didn't make sense. And I could not deploy my incremental capital at high rates of return. Since I can't do that with this company, that position would become small enough because I'm deploying in the other companies for me to even care about that position. That is the reason that I ended up selling Sequent. And similarly for Polymedicure. Polymedicure, for those that might not know, because I don't think Ishmohit has talked about this until now, or not in detail at least. Polymedicure is a company that makes plastic IV granulas. These are essentially consumables in the medical sector. They are used in things like blood transfusion and things like that. They make syringes as well. This is a fairly concentrated industry. They are somewhat in the same space as Tarson's, though not direct competitors, different kinds of products. And Polymedicure again has amazing track record. And I hope it's okay, Ishmohit, if I can just show screener for a moment, because
Yeah,
when you look at,
definitely, guys. No worries.
yeah, when you look at Polymedical's track record, it's going to blow away minds for people that might not have seen it. Let's look at their sales and margin. Just look at this from April 2005 to now, right? Including the last quarter and including the COVID disruptions. It has gone from 15 crore sales in March 2005 to 225 crore sales now. That might be like 15x or something. A tremendous amount of compounding. And just look at the consistency of their top line, right? And even the bottom line, although it has varied a little bit, I would say it has generally been pretty healthy. But look at the top line, right? The consistency with which they have compounded. This is tremendous. I mean, this is no different from the way that a FMCG company generally compounds its sales. So the point I'm making is Polymedicure, again, very good quality company. But what I could see is that they were going to invest for growth, and at least for a period of time, their return ratios would be suppressed. In general, this is a capital intensive industry to my mind, because they don't have very high asset turns. And even the ROCEs are not very high, at least to my mind. They are more around 15, 17%. They also grow around 15, 17%. So for that quality of company, when it went to something like 70 PE, 80 PE, let's again quickly go back and see, it went around 75. When it went to that kind of multiple, to my mind, the risk reward ratio was not favorable for incremental capital deployment. And that's the point I want to talk about, that the fact that I have to deploy incremental capital forces me to be valuation conscious, because otherwise, what am I doing with that money? I'm just sort of throwing good money after money that has already done well. Just because I've made some good money in my first investment into polymedicure, I can't deploy more money into it. At least to my mind, it doesn't make sense. You can do it a little bit, but like not a large amount of it. So those were the reasons that I sort of ended up selling Sequent and polymedicure. Now, again, if anyone actually tracks me, the immediate question would be, why not sell Saregama? You have sold Sequent and polymedicure. Saregama is also trading at a high multiple. So why not sell Saregama, right? And wonderful question. That those are the kind of questions we must ask. In fact, one of the key things I learned from Value Picker is that we must learn and focus on the ability to compare different type of companies and do apples to orange comparisons, because otherwise our portfolio will become like a zoo. At every point, my endeavor must be that my new pick should replace the company from which I have the lowest return expectations. That's how I'm doing best ROIC, and not going sort of too diversified for me to track it, for me to get good returns. So the question of Saregama, right? There are multiple reasons that I have not yet sold it. Although, of course, the valuations are worrying even to me. I still haven't sold it. And let's discuss a little bit about why. One of the reasons is that one of the things that I care about deeply, I haven't yet talked about it because that's not really related to impact of the professional life and all that. But apart from that, one of the things I care about is the quality and the diversification of cash flows generated by my portfolio companies. I don't want to have a portfolio which is 70% in pharma or 70% in chemicals, because in my opinion, especially to someone like me, who does not have these sectors as his area of competence, it's too much risk. And in that sense, Saregama provides what no other company is able to provide, which is a kind of cash flow which is coming from a place which is very unique. It's coming from an industry which is A, tech, B, consumption, C, premiumization, and I can talk about many such tailwinds. The point being that this is a very unique place for the cash flow. This is not a B2B business in the traditional sense. It's not making a commodity and selling to someone. This is ownership of IP. You actually won't find too many IP companies in India, and not ones that are able to do well, because it's not just about IP, it's about owning good IP. In fact, the way to figure out the business prowess of IP companies is to figure out the quality of their IP. By IP, I mean intellectual property. So all these 130,000 songs that Saregama owns are their intellectual property. We must figure out the quality of the songs that they own. And then we can figure out like at what number to value it. So most people would just look at key Tips has these many songs, Tips has these many subscribers. Why should Tips not get the same multiple as Saregama? I think again, we have to figure out the quality of the uh, catalog that they have, not just the number of views. And some of these things actually show up in things like the stability and the growth of the cash flows. If you look at Saregama, they generally have quarter on quarter growth in their streaming revenues. Whereas when you look at Tips, sometimes they have down periods as well. Because, for example, sometimes I think there are multiple issues with Tips, but let's just talk about a couple. One is that a lot of their revenues actually depend on physical performances and stuff. If I remember reading, I think 50% or a pretty large number depends on physical performances. Whereas for Saregama, I think 80% is digital. So again, that the fact that a lot of it comes from streaming, right? Second thing is, and this is something I think Ishmohit and I have discussed, that Tips does not have the kind of diversity in their catalog that Saregama has. So, some of these are really important things. The point being, you can't just look at a buy or sell decision, in my view, from the point of view of a single company. We must evaluate it from the entire portfolio point of view. From the portfolio point of view, what Saregama provides me is diversification of the profit pool, and that is something I would want to retain at an even higher multiple. I might even hold it at 120. Let's discuss some other reasons. If you look at the largest music group in this world, that's, I think, Universal Music Group. Universal Music Group itself is valued at a very high EBITDA multiple. Despite the fact that they're the largest, they're not growing like that well as well as Saregama, and still they are valued very highly. That again shows the fact that the global equity markets understand and acknowledge the longevity and the quality of cash flows in this industry. The fact that there are extremely high barriers to entry, extremely high. So my point is, you can't just look at a number and figure out like, okay, 70 PE I'm going to sell. At least in my view, that's not what I do at least. What I tend to focus on is the barriers to entry, the kind of quality of cash flows and things like that. Not just the number, right? Because Saregama at 70 PE, Sequent at 70 PE, Polymedical at 70 PE, all three are different decisions. It's not just, if investing were only about numbers, then it would be much easier, but I don't think it is. So then, we've talked about the impact on the type of investing, durable competitive advantages, valuation as protection, concentrated portfolio, simple companies, tailwinds, longevity of growth and profitability instead of just a one-time pop in profits. So all of these type of investing or these characteristics of investing then have an impact on the type of companies that I end up owning, right? And let's talk about some of them. And again, just to repeat the disclosure, I am invested in all of them because these are companies that I own right now. And none of this should be perceived as a buy or sell recommendation. Everyone must do their own due diligence or consult their financial advisor in figuring out about what kind of companies they want to own in general. And they must develop their own conviction, not borrow it from anybody, including me. So to talk about RSCL GearTech, I mentioned this briefly, but the fact that they have extremely high sticky customer relationships, right? 15, 20 years with Kubota. They went from, I think, one, uh, one part to 100 parts in a matter of some 14, 15 years. Extremely sticky customer relationships, right? Uh, Another fascinating thing, at least to my mind, they're fairly recession proof. And this is again shown by the last 2, 3 years. Last few years have not exactly been great for Indian auto. I don't think they have been that great for global auto either. But RSCL has grown their revenues. In fact, let's quickly go over to RSCL once. Let's just quickly check how much they have grown. So last 3 years, 14% sales growth. Last year, 48%. So I would say for an auto ancillary facing headwinds, growing at 14%, I think this is pretty remarkable. You will find that there are not too many companies. And also look at the quality of growth, right? In the last 5 years also, they have 20% ROE. This is not a traditional kind of a business that you see. So the the fact that they are recession proof, right? We should try to think about it. The fact that they are providing parts that go into high end bikes, 40,000 euro or $40,000 bikes. The people that are buying a $40,000 bike don't care about recession. They don't care about. They are not dependent on their income to make purchases. They have enough of asset base to make purchases out of. So the point being that again, the quality of earnings matters a lot. You can't just look at the numbers. People would point out other auto ancillaries to me and say ki, similar numbers, but you have to see what's behind the numbers, what kind of clients they have. Luxury clients are always better because their end customer has higher spending power, higher ability to take on price increases, higher ability to spend even in times of recession. And that makes the quality of earnings, quality of revenues far better. So that's about RSCL. So, when uh, uh, people might say that at 25 PE it's overvalued, I would say not really, like at least not to my mind. And I'm sort of weighing the pros and cons. The con being the fact that it is an auto ancillary, first of all. B, the con that it's a micro cap. It still has to prove its scale. Weighing all those cons, I still don't find it overvalued. I find it fairly valued for the kind of advantages it has, given the fact that it's a micro cap. Meaning that being the fact that it's microcap should go against it, but still I find it fairly valuable. Then let's talk about Saregama, right? Uh, Content mode, durable competitive advantage, pricing power. Again, we have seen this multiple times. In fact, Vikram Mehta has talked about this in the recent Saregama, uh, I think, Investor Day, RPG Group Investor Day presentation. What he mentioned is that for the same song or the same catalog, a smaller label might get 5, 7, 8 paisa per stream. Saregama gets 10 paisa per stream for the same song. Why is that? Because they have higher pricing power. Saregama has such a huge catalog. It's extremely hard for any end streaming app to say no to Saregama. Why is that? Because the fact that 1,30,000 songs, think about it like this. let's say some company said no to Saregama. What would be the end user impact? For that 1,30,000 songs, you might have 1 million or 10 million end customers, right? That are listening to those songs, that are sort of repeat listeners. All of those customers will have a bad experience, right? So any end music streaming app, for them to say no to Saregama is extremely hard. Compare that with Tips, 30,000 songs, much smaller size of catalog. And look at how their negotiations have panned out with some of these applications. They haven't been able to strike a deal. That's because they don't have the kind of bargaining power that Saregama has. So again, the quality is much, much better in my view. And of course, it shows in the valuation also. But another thing I want to point out is the point at which I bought Saregama, and due credit to Ishmohit for discussing it very openly. Uh, the point at which I bought it, it was valued at something like 30 times earnings. And at that price, you could see that it's just grossly undervalued because of the great tailwinds. It's, as again Ishmohit says in his videos, a perfect Lollapalooza effect, right? Wonderful kind of business. You actually don't have to do any capex. You can do capex if you want to kind of continue to have that advantage. Even if you do no capex, you'll still have amazing profitable growth, because the number of listens for the catalog is going up 20% every year. So you put in no money, you get 20% more money every year. You do this, you keep getting this money for a very long time because of all the tailwinds, right? So tailwinds, uh, to my mind, it was a throwaway kind of valuation. Content mode. So, the same kind of characteristics I talked about all apply to Saregama. And in fact, if you look at it, all of them will apply to all of the companies. Again, longevity of growth, right? If you look at data from any global music uh, uh, players, for example, Spotify, what you figure out is that I think 50% of their revenues come from, 50% of their users are ad supported, 50% are subscribers. They pay subscription fees. I think in India, that number is 1% are subscribers or less than 1%, and 99% are ad supported. So that same kind of a thing will play out in India, what has played out in China and US and the rest of the world. That provides us the longevity of growth. Now, I can't say whether this will happen in the next 3, 5, 10, or 20 years. But the thing is, it will happen because it has happened throughout the world. As people get more money to spend, they are able to spend it. In fact, we can see it in other things like Hotstar. I think Hotstar had released some numbers. I think 20-30% of their subscribers are sort of paid subscribers. So the point being, Indians are happy to pay as long as the right conditions exist for them to pay. So tremendous longevity of growth. So I want that in most of my companies. Mastech, what better way to study than to look at the video that Ishmohit uploaded some time ago. Uh, he has probably done a better job than the thread I had written. But I would say it's still good to study as many viewpoints as possible. Even for the companies I own, I try to study as many viewpoints, because generally we learn something from every incremental viewpoint. And every incremental viewpoint, in my view, has a better ROIC because I already know the company very well. So studying it again would be very easy. For me, let's say I've written a Mastech thread, I own it. For me to watch Ishmohit's video at 1.5x would be very easy, and I would obviously get his viewpoint, whatever things he's focusing on. So my point is, yeah, Mastech has the same kind of longevity of growth and tailwinds, like we discussed digitization, right? Let's look at Sasta Sundar. This is one epic example where, when I started investing, most people said it has a funny name. So among all the reasons I have listened to in terms of not wanting to invest in a company, having a funny name is probably at the top of the list of, like, I don't think that's a good reason to not invest in a company. It is a funny name, Sasta Sundar, right? And all of you, I will encourage you to read the value picker thread on Sasta Sundar. I have added a lot of good data on value picker, and what you'll figure out is I laid down the thesis. I talked about the fact that it has a differentiated business model. It has far better consumer, like consumers prefer it much more and are more satisfied with the services of Sasta Sundar compared to Farmizi, 1MG, and all of them, right? And that's the power of digital scuttlebutting. I did a little bit of this in my recent thread on Mirza, but my point is you can do this for anything that is user facing. The reason is Most of these companies that are user facing consumer brands will have a digital presence in one form or another. Their products might be on Amazon, or in this case, Sasta Sundar has an app on Google Play Store. So you can go to their app, you can read their reviews and figure out what's happening. So when people say that, how do I do scuttlebutt? In user facing brands, figure out what their digital presence is and do scuttlebutt there. In Sasta Sundar's case, and let's do this right now, right? I think this would be a good exercise. So Play Store, Sasta Sundar. So let's open this one. So now I think it's around, I think 4.5. Yes, 4.5 is the rating. Let's open something else, Farmeasy. Just to be clear, like when I had looked at it, Farmeasy's rating was much lower. It might have improved. So my point, I might not be able to make it. Yeah, it's far better now. But at that point, it was much lower. I think 4.2 or something. Let's look at 1MG. 4.4. My point is, this is really important because let's say you go here, you can actually look at this. Please avoid at all costs, very pathetic customer support, nightmarish experience. My point is, you can actually, I did this. I read 50 or 100 reviews for each of these apps and then try to condense my learnings into a spreadsheet and sort of bucket each of the learnings. Let me go back to the presentation. I try to condense my learnings, that what is this saying about the company? That's when I was able to figure out that Sasta Sundar has a much better customer experience than any of the other apps. So even in terms of the problems, people generally say things like Sasta Sundar gets the correct medicines, whatever I had ordered. Their worry with Pharmacy and 1MG, at least when I had done the research, was that they don't send the same medicine. They would substitute it themselves. Sometimes they are missing. Sometimes I pay for it. I don't get it. I get the other one and things like that. So my point being that it was clear that Sasta Sundar has an identity of its own. It has a good business model. And most importantly, as far as I could tell, they had the highest profitability in the entire industry. So they are almost break even. They are still making losses, but very, very small losses. They are very near the break even point. I could see that, and whatever public data was available showed that Pharmacy and 1MG they are not near the break even point. And Sasta Sundar was not growing slow by any stretch of imagination. I think they were growing at 30-40%. Granted that Pharmacy and 1MG were growing faster, but my point was that if the entire industry is growing at 25%, that's the point on tailwinds, then it makes sense that a lot of players will do well. So even at that point, my hypothesis for Sasta Sundar was that there is very low probability that on the basis of its own might, it will be able to do well and compete against the might of the Tatas and the Reliance and the Amazon and establish itself. But one of the opportunities is that someone might acquire it and provided that capital. Something like that has already happened. Flipkart has invested money into Sasta Sundar, and they have acquired 75% stake in the B2C business. The B2B business and the diagnostic labs are still sort of 100% owned by the Sasta Sundar Ventures listed entity. My point being, again, coming back to Ishmael's point, there is so much room for us to do deep research because a lot of people go with the social narratives in investing. They don't go by the data. So anyone that is willing to look at the data has a huge advantage because we are trying to overcome our biases. The bias is Pharmacy has a dynamic CEO, they are going to do well. The data is not that. At least it wasn't when I had invested. Okay, so that's Sasta Sundar. Let's discuss red tape. So this is probably the one where I have the least amount of comfort because definitely there are some very pertinent or important corporate governance issues in this company. This company has done related party transactions that might be shortchanging minority shareholders. So for that reason, definitely this is a difficult investment to make. But at least from what I could tell, and I've sort of discussed this in depth on Value Picker, at least to my mind, the risk reward ratio was very favorable for Red Tape. So that is the reason that I decided to invest. But at the same time, I am very cognizant of the corporate governance concerns. And that is why I have only sized it to 3% or 4% of portfolio, not 8 or 10%. The quality of numbers, the quality of business that they have, if the corporate governance issues were not there, I might have sized it at least at double and probably at triple the size that I had done. So my point being, uh, there is a case for variant perception that was to be made. Great tailwinds. Again, if you study the Metro Shoes IPO, and that comes back to my earlier point that for studying one company, you actually have to study three at least. If you study the Metro Shoes IPO, you will see that there are tremendous tailwinds in this sector. Uh, it was misunderstood, so valuation is acting as protection for capital. Extremely simple business. There is no complication in the business itself. There is a competitive advantage because they have a brand. This is a consumer facing brand. And you can, in fact, look at the way that their top line has behaved in the last 2, 3 years, especially during COVID, compare it with other footwear makers. You will figure out that they are able to grow much better than the other footwear makers while remaining profitable. That's the challenging thing. So if you do the segmental analysis on them, you will figure out that they have pretty good segmental ROCE. And again, coming back to Ishmohit's point, uh, as far as I have seen some cases where uh, institutional investors have done less homework than retail investors. So my point is, we should not just assume that just because. For example, people look at things like DII buying, FII buying. I don't think those hold any merit, at least for me. They might be a good starting point on deep dive, idea generation, right? But after that, it's about my conviction, my deep dive. And my point being that there is room for us to deep dive and understand the company well. And after that, if we have a variant perception and we are correct, then there is a long longevity of growth, tailwinds, simple company, valuation is a protection for the capital, and there are durable competitive advantages because it's a brand. That's red tape. Finally, let's talk about Newland. This is probably the company I've worked hardest on, and that has until now given the least returns, but I don't care too much about that because again, I don't care about the here and now. I want good returns in a 3 to 5 year time horizon, not in the first year. And that's one of the perks of managing your own money. You don't have any investor to answer to except yourself. So if your thesis is for 3 years, you're happy to hold it for 3 years. You don't care about the like this quarter results and so forth. So if you dive deeper into Newland, you will figure out that they have extreme dominance in the places that they operate in, which is custom manufacturing solutions, the CDMO part of the business, peptides, extreme amount of competitive advantages. For example, taking the example of peptides, they started investing, I think, 10 years ago or something, maybe 12 years ago. Again, very ahead of their times. What we have to understand about peptides and like science in general is that it's accumulative. It can't just be done just with money. If today I had 100 crores and I told Ishmohit, why don't you set up a peptides plant? Let's make some peptides. We won't be able to. Even if we throw money at the problem, we won't be able to because we need to go through that learning curve of understanding how to develop the short chain peptides, the basic building blocks, and then be able to do it at a larger scale, do it commercially, do it with the highest amount of purification, and so on and so forth, right? And if we look at the and again, in terms of corporate governance and disclosures, I think Newland is sort of head and shoulders above everyone else because they keep writing these monthly blogs that go very deep into the business and into the technical details of the business. So to a curious investor, this is a gold mine of information. And this is another example of like the fact that we can't end our research at con calls or annual reports. We have to go wherever the data takes us. So again, just to quickly give an example, Newland Labs blog. So this is the one, right? You'll find that they write a very large number of blogs. You'll find like the latest one here, exploring Newland's therapeutic segments, focus on CNS. They've talked about whatever they're doing in CNS. They go into extreme amount of detail. I think that's important because that's how we develop our conviction. And my point being that most companies won't present such an opportunity, but the ones that do are actually also allowing us to have an advantage in terms of investing in that company. So, like again, as an example, when I was studying Heikel, right, my question to investors in Heikel was, what kind of competitive advantages do they have? And I couldn't find very good answers to it. And it's not that those competitive advantages might not exist. I'm sure they exist, but it might be easier to study some companies than other. For example, I think Newland is much easier to study than Heikel because they openly talk about everything that they're doing, including these blogs. So my point being that, yeah, it's uh, extreme amount of scientific dominance for them, high durable competitive advantages, pretty good tailwinds, China plus one, APIs, all of that. Extreme amount of longevity of growth because they're investing for the future. You should read about peptides and why, like, basically peptides are closer to what kind of molecules our body already makes, and that is why they have better bioavailability. They are able to, like, our body is better able to assimilate and use those molecules. Um, so we should go into the depth of these companies. Let's move on to the next one. So let's talk about a day in my life. Until now, I was talking about sort of two important aspects. One is the kind of things we can do to maximize our throughput. The second thing I talked about is how do these things, the constraints we have as a professional, impact the kind of equity portfolio we build. What I also wanted to do is quickly talk about the kind of day I have, because I think many people are interested in the practical sort of, like, what do you do every day, or like how do you manage it every day. So in my case, I generally wake up at 7 a.m. With an alarm because I don't want to sort of be late for most things. I might then do some freshening up and go for a walk at 7:30 a.m. This is the time I mentioned where I'm reading or listening to con calls. I generally try to do this for at least 2 hours every day, but sometimes 2.5 hours also. Today it was more like 3 hours. But my point being, there's this good chunk of time that I'm able to dedicate every day to research. There is always a lot of companies to understand, and we don't have to limit ourselves to Indian equity. In my view, there are some truly exceptional companies in my view that are listed in USA and probably in Europe as well, that are doing very unique kind of work. But we have to just find them and then listen to their con calls, understand what they're doing. And then there are platforms like Grow, which I use as a disclosure, which allow you to own all these companies. And of course, this is not a like, I'm not advocating that everyone should use Grow. It's just it was most convenient for me. So anyway, 2.5 hours of that, then dedicated time for Google work, focused on the day job. I don't take food breaks. I won't have breakfast or lunch. I'll keep working. I'll obviously take washroom breaks and try to, like, wash my face or something, but nothing more than that. And I'll try to work for at least 7 hours a day, and in most cases 8 hours a day. And what you'll find is this focused time, generally, at least for me, it works far better than having breaks. For example, and again, this is, uh, I can't give financial advice. I also cannot give any medical advice. I'm only talking about what works for me. But what I've seen is that when I don't eat any breakfast and lunch, I'm able to have higher focus because eating makes me sleepy. So I have found that that also increases my efficiency. That I'll basically eat at the end of the day, and I can manage to relax at that point. So again, just to reiterate, I'm not giving medical or health advice to anyone. Just talking about what works for me. So at 6 p.m., I'll probably cook a little bit. I like cooking, and then eat dinner. Uh, I only eat once a day. I've done enough research, and I'm convinced that this kind of thing, intermittent fasting or time restricted eating, and this thing called OMAD, which is 1 meal a day, is the right thing for me. But I also want to caution everyone that please don't just go and start experimenting with your health unless you have the appetite for that risk. My point is, be very conscious and cognizant of what you're doing. Do not clone conviction even for health. For me, like, it works out good for me. But for example, one of my friends tried something similar and she lost hair. My point is, you can't just expect everything to work for everyone, especially in biology. If you have studied biology deeply, you'll understand that all of us are not sort of the same product. Like, the humans are not a cookie cut product made out of a factory, right? All of us have a different body. Different things work for different people. This works well for me. Everyone should figure out what works well for them by doing enough tests, by doing enough measurements, by talking to their doctors, nutritionists, and the amount of experiment that you are comfortable doing. I am comfortable with eating once a day, so that obviously saves a lot of time for me because most people might spend 2-3 hours every day eating. I generally spend 1 hour every day eating. That gives me a lot of time for other things. So let's, yeah, after that 7 p.m., I'll probably spend some time with family, talking about our day and anything that we want to talk about. Uh, at 8 p.m., I'll spend some time alone and with my wife, a mixture of this. And 8 to 11, I'll basically spend time talking to my wife, and sometimes we will watch TV together and things like that. And then at 11 p.m., I will try to sleep generally. And, that's sort of what a day looks like. The thing I want to point out here is that there is actually a lot of time in a day, but the thing is we have to drill down and understand where is that time going for us. And people that are saying I don't have time, they have to drill down and understand where that time is, like where are they losing out on that time. And I fully understand that different people have different circumstances. For example, I don't have kids, so obviously I don't have that responsibility. Those of you that might have dependents, kids and so forth, will have a larger drain on your time, and you'll have to figure out different kind of uh, balances basically. And the least we can do is to do research on our weekends, right? That's the least we can do. So let's move on to the next part. So lastly, what I want to talk about is the practical learnings, sort of the distillation of everything I've talked about and what I've gained from all of this. Uh, I think most importantly, I think in general, life is about capital allocation. All life is about capital allocation. The only question is, what is the capital? Is it money? Is it time? Or what, right? Uh, to me, at least, time is the ultimate capital that you allocate, and then sort of money follows some of those decisions. Second is, I firmly believe that balance is important. I don't believe that we should go extremely in one direction and like become completely obsessed or fanatic about something, because at least to my mind, that is not a sustainable place to be. We can't sustain that over long periods of time. So at least I personally need the time to relax and unwind. Another thing I want to say is that the thing I showed earlier, this is not a thing that I follow every day. I might follow this 90% of the time, and then 10% of the time I will allow myself some leeway. As I was telling Ishmohit in the beginning of the presentation, I eat once a day, maybe 90% of the times. But yesterday, I felt a lot like it. I had some pizza. I had 3 slices of pizza. But then I was conscious about my decision. So I decided to walk an extra 5, 7 kilometers in the morning. My point is like we should be conscious, cognizant about our decisions, not just have like it happening randomly or subconsciously to us. Balance is important for sure. We have to sort of have that leeway with ourselves. The third thing is practical learning. I can listen to con calls at 1.5x. I do listen to SOIC videos at 1.5x, and that helps me a lot because I'm saving time, right? If I listen to a 1 hour video versus a 45 minutes or 40-minute video, uh, much better to listen to a 1 hour video in 40 minutes. And at least to my mind, I'm able to retain. And this is something that you have to do slowly over time. If most of you have been listening to Ishmohit, my guess is if you listen at 1.25x, you'll have a very good retention. But it's something you have to try out, build that kind of thing over time. But at least for me, again, this has been like a lifelong thing. I've been doing this since I think college for sure. Listening to things at 1.5x. Another thing is I try to parallelize or pipeline as much as possible. Uh, and I did note that like one of you sort of felt sort of that like I should not use the word parallelize and pipeline in a kind of interchangeable way. But just to be clear, since I'm not teaching computer science, I'm not being technically rigorous. I'm trying to look for words that make sense to us in our daily lives. So that's why I used parallelize. I try to parallelize and pipeline as much of my life as possible. For example, if I'm cooking, I will try to figure out what element of that dish will take the longest to cook or to figure out, and then I'll start cooking that first. If I'm making pasta, I might start boiling the pasta first because unless I have that, I can't have anything else. Then next, I'll probably start with the vegetables and things like that. The point is you can parallelize and pipeline lots of things in life, and that saves us a lot of time. Uh, I brutally prioritize. This is something that I think companies pay us to do, but we have to brutally prioritize. And just to be clear, when I say I don't waste time, I don't mean to say I don't relax. What I mean to say is I'm cognizant of how much time I'm spending in those activities. Um, there might be periods of some weeks when I'm only relaxing, but I'm cognizant of that. I know that I am sort of borrowing from my own future. I'm borrowing my relaxing time from my future. In the future, I'll probably work harder, right? And the point being that it's important to prioritize and be cognizant of our choices, not make them subconsciously. Third point I want to make, I didn't talk about this a lot in my presentation, is the time value of money. And I think this is really, really important. Uh, let's say some of us hypothetically are making 1,000 units an hour. This would be 1,000 rupees or whatever. I'm just taking a random example. If we are making 1,000 rupees an hour, then in my view, spending 200 rupees on food is perfectly okay if I'm going to use that time productively. And I think this is a trade-off that people should make blindly, because the idea is that we should be able to use our time productively as much as possible. And in that way, that expense will more than pay for itself. Another example here is uh, for people to use semi-automatic washing machines. To my mind, it doesn't make sense because you're wasting your time. The automatic might be a larger cost upfront, but has much higher ROIC throughout your life because you're not wasting time on it. You put clothes into it, they come out of it dry, and you're done. So to my mind, it makes sense to do these trade-offs consciously and try and allocate our time very well. So the point being that anything that I think I don't enjoy doing, I would want to outsource it if it's not expensive enough. So another key learning is that I don't want to turn my portfolio into a zoo. I don't have an ability to track 50 companies. I don't want to track 50 companies. I really, really prefer to uh, have a concentrated portfolio because that's the correct use of my time in my view. It makes sense to go deeper. It makes sense to study new land for 1 or 2 months rather than have a 50 stock portfolio and study every company for 1 hour or 2 hours, because that's when we can develop a lot of conviction. And you actually need that conviction. If you look at things like Newland, Loris, many of them, even Webhub Global, Ishmael talked about it, I think, in one of the webinars. Their price has corrected like anything. And the thing is, the only thing that can make us stay put is our conviction in the business. The only way to get that conviction is to do a lot of research on it, not just like 5 hours or 6 hours, but like weeks, months, keep continuing, right? It's a continuing journey. You don't ever stop at any point. So another thing is I want to stay in a company where I can at least have 2 to 3 years of growth and profit triggers and undervaluation. And the reason is I want good ROI. So let me explain this. um, I don't want to be in a company where I might be able to make a quick buck, because I then need to keep repeating that every 6 months or every 5 months, right? I want to be in a company where I can make 25% or so over a period of 3 to 5 years, 25% CAGR over 3 to 5 years, because that has the highest ROIC in terms of the time invested into the company, in my view, because the churn or the turnover is lower. It's not like I have to keep reading about new companies, because reading about a new company takes a lot of effort, right? You have to sort of mentally balance between understanding and knowing and tracking k different companies. And if I'm churning them continuously, in my view, that's harder compared to having a lower churn. So last, I focus on the ROIC for the portfolio as well, not just for the capital allocation of the company. It's, you have to track it at every level for the company's capex, for your allocation into the companies, and for your time allocation into your life. So I think, yeah, that's about it. I'm done with the presentation.
Right, right. Thank you so much, Sahil. And I think one of the biggest learnings, like, so at like while driving as well, because if you're commuting from West Delhi to Gurgaon or stuff, so I try to listen to stuff at 1.5 to 1.75x. That also helps a lot in terms of like allocating time to research. And so just a question from my side. So in a day, like 1 hour or 1 hour, 30 minutes or 2 hours of focused research for anyone who is working, I think even that works. What do you think?
Completely agreed. And I think like the important Another thing, let me go back to the initial slides. I'm very bad with memory, so I don't remember things. I'm going to just read Buffett's quote. Chains of habit are too light to be felt until they are too heavy to be broken. This, now you can apply Munger on top of it. Invert, always invert. If you actually think about it, if you once form a habit, then you can continue with that good habit over time, and that habit compounds over time. So I would say it's perfect for people to even start with half an hour to begin with, but do it regularly every day. And then you can see the compounding and start doing 45 minutes, 1 hour, 1.5 hours.
Right. Right. I think Sahil will take questions from the audience. So this time we'll allow the like tribe members to speak. So you can raise your hands and like limit your question to one per participant. Just like in con calls, it's like two per participant, because we should sort of give more and more people like more and more tribe members to ask questions. The first question, I think I'll just allow Chetan Patel to talk. So I'm just like giving the talk option. Just try to limit your question one per participant. Right. Oh, I think he raised his hand down. So Harsh, I'm just I think to Mr. Sachin Gupta, I'm just giving the permission to talk. Right. You can ask your question.
Okay, thanks, Sahil, for sharing your important views. My question is on framework. What framework do you use for brutal prioritization? I think every individual has his own framework. Is there any framework which you do use to do prioritization?
Yeah, thanks for the question. I think very important question. The concept of brutal prioritization can be applied to many walks of life, but we have to, it depends on the specifics, what framework we apply. What I do for prioritizing among projects at Google will be very different in terms of its specifics than what I do to prioritize between how I allocate my time, than what I do to prioritize between companies, right? It will be very dependent on the specific situation. So in this case, I think you want to know about the time prioritization or which one?
I think by mistake he got dropped off. I'll just give him the access. If you can just raise your hand again, I think by mistake from right, Sachin, right, allowed. Right. Yeah.
I think it's most important is the time prioritization in a day or a week or over a month. I mean, definitely on a time, not on the project side of it.
Right, right. Yeah, thanks for clarifying. I, at least for me, the way it works is all of us are different. So we have to figure out what we are comfortable with and slowly ramp up or ramp down on things, right? It's very difficult. Like, again, to take an example, uh, if I eat 3 times a day, for me to immediately start having one once a day is very difficult. But the important thing is we need to know the direction. In terms of the framework, I think the important thing is to ask yourself what is important to you, right? That's the framework basically. Uh, you might have seen the TV show called Pictures. Where basically every time he has to make an important decision, he flips a coin and then asks himself what he really wants to do. While the coin is in the air, you already know the answer to what you really want to do. And like, I think basically it comes down to having a list of things I want to do and learning to say no to things, because I can't do everything, right? So at least to me, the top 3 things which are important is doing well at my job, compounding my capital well, and being healthy. And of course, staying entertained and talking to family are all part of being healthy. So we have to figure out those key things, right? And then allocate time to them. But basically, the idea is we have to be flexible. Like, I don't think there's a formula for this. Like, at some point, I might have allocated less time, and then I felt that this is not working out for me. I need to allocate more time. So then I allocated more time.
Great. So I think next question we'll take from Avinash. So Avinash, I'm just giving the permission to talk. You can ask the question. Right, I think he's on mute. Right. Now he's just unmuted. Avinash, you can ask your question if you have any.
Yeah, hello.
Hi.
Yeah, is it audible?
Yeah, you're
Yeah.
on.
Yeah, it is a very good call actually. Only my one question is that why this loss-making company Sasta Sundar actually in track? Because I am seeing his past records, it is a consistently a loss-making company. Then why you have chosen such company?
Yeah, thanks for the question. Basically, the question is, what was my thesis for Sasta Sundar, right?
Yeah.
The answer to that is, we could see few different things. First, again, if you're willing to do deep research, we would have gone through all their announcements. They're not too many, maybe 200, 300. You can filter it by type. You can look at investor presentations. In 2018,
Okay.
they had uploaded a investor presentation in which they said that in the steady state, they can make 20% EBITDA margins. It's just that right now there is extreme competition, aggressive pricing, but in the steady state, they will be able to make 20% EBITDA margins. So that to me told me that I should not look at where the puck is. I should look at where the puck is moving. The second thing I did is I looked at distributors in the US, the brick and mortar distributors. What I could see is that brick and mortar distributions also had a 5% EBITDA margin. So to my mind, an e-pharmacy with much larger scale, much higher efficiencies would be able to get 10% EBITDA margin, if not 15 or 20 as they are claiming. And to me, the question was, do I see it surviving? That was the only question. If I see it surviving, I think it would thrive. So that's why. But one more thing I want to say is, in these kind of things, like you rightly said, it's loss making, doesn't have a track record. We have to limit our risk as well, which is why I didn't put a lot of my portfolio in it. I might have put 3 or 4% again, just like Mirza. I didn't put a lot of money into it.
Right. So I think I'll move on to the next question. Right. So next question we have from Harsh. So Harsh, I'm just giving you the uh, access to speak. So I think you can just unmute your line. You can ask any question that you have. You can just unmute your line from bottom left of the screen. Right. I think so. I think we'll move on to the next questioner. Just moving on. So yeah, the next question is from Deepak Mehta. So just a second. Yeah. So have given the permission to speak, Deepak.
Yes,
You can ask.
yes. Thank you for the session, Sahil sir and Ishmoit bhai. So my question is around a bit personal. So you are a good coder, I think, as well, because you are working in Google and you have experience of understanding of business and doing business analysis. Have you ever thought to start your own startup, which which you can find interesting and you can start in your own? So it will, give more return on capital, both in time as well as satisfaction, I think.
Yeah, wonderful question. And thanks for asking that question. It's an important thing that everyone should think about. Again, it's a question of time allocation, right? Where do I allocate my time? At least to my mind, the problem with being an entrepreneur is that it's extremely high risk. So unless you have very high appetite for risk, it doesn't make sense. It makes sense if, let's say, my dream was to be a billionaire. Then the only way I can get there with my means is to be an entrepreneur. Otherwise, I can't. Because with the entrepreneur, the upside is literally unlimited, or rather limited by market size, but you can go into adjacencies and so forth. But for me, that is not the dream. For me, the dream is to enjoy my life while creating as much value as I can. It's about that balance, right? For me, work-life balance is important for me. So I'm not happy taking that huge risk. Uh, Google is giving me that downside protection as well. In fact, I've told this to some people that, for example, one of the reasons that I'm able to invest my money in microcaps is because I have that assurance of a good salary coming from Google. If that was not there, I might have been a much more conservative investor and invested in large caps. I think yeah, it's about the amount of risk you want to take. And counterintuitive to what people might think, I'm actually a very conservative person, but the salary allows me to take some risks with the equity part.
Thank you so much for your honest answer. Thank you. Best of luck.
Thank you. Thank you.
Great. Just going forward. So Jay, Deepak done. So Jay, so I'm just unmuting your line, Jay Prakash. So you can ask your question.
Yeah, hello.
Hi.
Yeah, I'm audible. Yeah. Thank you, Sahil, for great insight, and Isa Mohit as well, because I just recently joined. So it was really a great insight for me as an individual from the Isa Mohit first and now Sahil. Really great to listen you about your journey. So Sahil, I would like to know about your initial days in this journey. If you can, give more light on this. And another is IDFC first. From how long you are invested in it, and what is your conviction? Because Vivedyanathan is there. That is, a conviction for me from last 3 years in IDFC first. So if you can give more light on this. Thank you.
Yeah, thanks. To talk about the early days, I think like the way it worked is, again, I think the lifetime of experiences we have set us up for the kind of decisions and the kind of reactions we have to situations. So for me personally, not being able to understand something is a very uncomfortable place to be in. I want to be able to understand everything, and probably some of it is driven by my curious nature. I'm very curious. If any of you might have seen, again I'm repeating this because I think it bears repeating. I ask the randomest of things in Twitter polls, but the reason is because I'm curious. I want to know about. I'm curious how many of people would do X versus Y, things like that. So the reason that's important is, to me, mutual fund investing was something that was a very hard pill to swallow, because it was about, there's a black box, I can see 2 or 3 numbers, but I can also see that future returns and past returns are not really correlated. So how do I make a decision? I still haven't seen a great answer on how to make a decision. In fact, if anything, mutual funds, we are betting on the manager, but mutual funds also change managers. So how can we look at their 10-year track record if the manager has changed 3 times? So to me, picking a mutual fund seemed a very hard thing. The conclusion I came to is, in order to understand whether the mutual fund is good, I have to understand whether the company they own is good. What that means is I have to understand the company. If I understand the company, then why am I paying fees to the fund manager? I can just own the company myself. That was sort of the starting point. And like
Yeah.
Ishmohit said, some initial losses, things like Yes Bank, it made me feel that I don't really understand this well. And at least to me, whenever I don't understand something, my reaction to that is if that is an important enough problem, I should try to invest time to understand that problem well. Initially, it happened with math, then with computer science, and now with investing. That basically most people feel that this is a casino or gambling or something, but I could see that there are people who have done well, say people like Warren Buffett. The point is, there is some structure to the problem and we should be able to figure it out. That was the initial motivation. To your question on IDFC first, like one point I want to make very clearly is that conviction in a position essentially means that we have more probabilistic belief in the positive outcomes than the negative outcomes. Every word in that statement is important. It's a probabilistic belief. It's not uh, it's not something that anyone can ever be sure about. So I cannot say that I'm going to give it in writing that this investment will do well. Nobody, in my view, can actually say that, including the promoter, and they know their business well. So obviously, me as an outside investor can't ever say that for any company. But essentially, at least to my mind, there were some important changes that they made. For example, they ensured retailization of the book, ensured granular kind of thing on the liability side and the asset side. Again, the CASA growth was something that I think most analysts thought that they won't be able to do. And I think now they have like the second largest CASA ratio after Kotak. I think that's a pretty big achievement in itself, and fairly sticky CASA as well. So at least to my mind, that was like obviously the very first thing is the management, like you rightly said, V. Vaidyanathan, management, most important. And again, if you look at the subtle clues, to me, it looks like he's a very, very conservative banker. He's not a banker who wants to give money and not have it come back. We can see that in their actions as well. Incrementally, they're going more towards home loans. Incrementally, they're going more towards prime home loans. So to me, that part was always very clear. At the same time, I don't claim that this will definitely do well, or this is the only thing that will do well, or something like that. The antithesis is also very clear, and frankly, I agree with, for example, Ishmohit's views. He, I think, expressed in one of the earlier webinars the fact that maybe for the next 2-3 years the ROE might not be double digit. That's my base case as well. That in the next 2 years the ROE won't be double digit. The only question is, are we happy or ready to sit for those 2 years, or do we feel that it's better to spend time somewhere else than come back? So that's sort of the only difference in opinion in my view. But apart from that, like, I think all of us agree on the facts.
Thank you, Sahil. Thank you.
Yeah.
Right. So this next question is from Venkatesh. So Venkatesh, I'm just unmuting your line. You can just unmute if, from your end. Right.
Hello.
I think I'll stop sharing my screen if that's okay, because I think I might go to a random page.
No.
Yeah.
Hello. Am I audible, sir?
Yeah, you're audible.
Can you just tell me your conviction level, high conviction level on this micro cap stock, sir? When you just picked a RACL Gatech at 70 crore market cap.
Yeah, that's what, like I think this is something which a lot of good investors have actually said, that the market cap of the company should have nothing to do with the risk profile of the company. It's a sort of a misnomer that the market cap is related to the risk. What really is the case is that the business understanding and the lack of it is what is correlated with risk. If I understand the business well and it's a good business, then a lower market cap is lesser risk, not higher risk, because it might be a mispricing, right? For example, 70 crore market cap, if it was at 7 crore, my risk would be 10 times lower. I might have made a 10 times larger position. Maybe not, I didn't have the capital, but my point being, market cap shouldn't matter. What should matter is the quality of the business, quality of the competitive advantages, quality of growth, quality of revenue, quality of clients.
It's basically understanding the business very well, right?
Exactly. And also being able to figure out whether it makes sense in general. So, for example, RACL case, it was a complete transformation journey. They went bankrupt. They were close to going bankrupt. Then they got transformed. One of the technocrat employees took control of the company and started managing it. I think it was a pretty good investment in my view, in the sense that, like, I think anybody, if they had studied it without biases, they probably would have made the same investment.
Okay, is that company shares owned by ESOP or what? Employees owned stock?
To be very honest with you, I don't remember that part. That, like, how did he end up owning? But if you think about it, as far as I know, RACL does not give ESOPs. My guess is that they might have had some kind of rights issue or preferential allotment or something like that. But I haven't gone into the details of that because, again, time is limited. I didn't find that to be like a very thing which would give me a lot of benefit in my understanding.
Okay, sir. Thank you.
Thank you. By the way, just a request to everyone, please don't call me sir. I'm still a very noob investor. Just call me Sahil.
Right. Right. So next question is from Shankar. So just unmuting your line. You can unmute your line from your end.
Right. Hi, Sahil. Hi, Mohit. It's a great session. Thanks for the valuable inputs that you have given till now. And my question is, what are the sources of your research? I mean, where do you all go and research? Let's say, suppose RACL Geartech, where all you go and research about the company to give that conviction that this is the company that I wanted to invest.
Yeah, thanks for the question. Actually, I'll answer it in two different ways. First thing I'll answer is there is this misnomer that people have, which is that small retail investor can never have access to the kind of things that large HNI investors have access to, and so there's a big gap, right? I'm not saying that that's not there at all, but my understanding is that there are innovative ways to research which many people don't use, which we can use. So there's a lot of insight to be had across. And I think the only way to figure it out is to be as curious about the company as possible, as curious about life as possible, to understand technology as well as we can. And then we'll figure out, oh, this tool is also there, that tool is also there. As an example, Google Trends tells you about trending search results. So one thing that I generally do is I try to see for a brand, what kind of Google Trends do they have versus their competitors. Let's say for Metro shoes, the brand is Red Tape. I would try to see how many people are searching for Red Tape versus the searches for other brands like Metro shoes. That tells me sort of how much they're able to capture that mind share of the customer versus their competitors. My point is, again, this is something that many people I haven't seen them do. So it means that there are these ways for us to do. Another point I want to make is that this is my personal observation that if we are willing to work hard and share the fruits of our research with everyone, then what I've seen is generally people are extremely giving as well. And a lot of senior investors have been more than happy to discuss their investment thesis, how they develop conviction, and any kind of insight that they might have into any company, if we are willing to work hard. So that precondition is there always.
Thanks, Sahil.
And I think there's also this like part of the course that tools to research. So over there we've discussed like it's a 4 or 5 hour plus class where all the tools that one can use to research, those are there basically. How to read con calls and whichever tool you can look for, right? So next question is from Sumit Kansal. And Sahil, also let me know like till when do you have time? Okay.
Yeah, sure. I mean, I have a lot of time. We can at least go till 4 for sure. So it depends on the questions, like if there are questions.
So Sumit, I've just unmuted your line. You can ask your question.
Hello. Hi. So first of all, thanks a lot, Mohit. This is the first time I'm able to thank you in person, and thanks a lot, Sahil, for today your time today. I really appreciate that. So my question is like, so I'm just to give you a bit of background. I mean, like I'm also like trying to learn and trying to read about the companies and go about investing the way Ishmohit has been teaching us, and you are talking about it. And one of the major issues I have is time, as you've read. So this session is really important for me. So I really wanted to understand, like, if you have a new industry in front of you or a new company to analyze, so how do you really go about it? Like, what do you pick? Do you start with the annual reports or directly with the con calls, or you just understand the basics of it and then go about it? And then you would be doing some kind of reading, right? So you mentioned about your day where you are listening to most of the audio calls. So I understand the con calls are very important and very essential. Once you understand the business and you have that like physical picture of the business in your head, and then you can understand where the company is going, what they're talking about, and where they're putting the money in future. So you would be doing some sort of readings, be it books or be it annual reports. I don't know, like, how do you go about it? So I just wanted to understand, like, how do you fit those reading times in your schedules, and yeah, just to get an insight. And when there's something new to you, like new industry and new company, how do you tackle it? Do you give it a month or 2 months? Like, how much time do you give it to completely understand and reach to a stage whether you know whether this is worth investing or not investing, and kind of thing? Hopefully my question is clear. Let me know.
Yeah, absolutely. Yeah, thanks. Absolutely, it's very clear. Thanks for the question. I think the answer to this is, for me, the way to go about doing it is, I prefer to listen to con calls and read the latest investor presentation, if possible, of the industry leader, because that generally gives us a very good idea. As an example, I'm reading about shrimp processing, and Apex Frozen Foods is, I think, the industry leader there. So I'm listening to their con call, looking at their investor presentation. And by doing that, you're able to understand the key variables or the important things about that industry. Uh, I prefer con calls and investor presentations, but I'm pretty sure if one chose annual report also, one would have a similar kind of a thing. For me, it works well because that like basically slides open beautifully on a mobile phone while I'm walking, and con calls of course go well with walking. Annual reports are a little harder. I'm happy to read annual reports in summers because I can take my iPad and scroll on it. Right now in winters, it's too cold in the morning, so I generally do my annual report reading on weekends. So that's why, like, generally I prefer con calls and investor presentations. Another point I'll make is for a lot of these industries now, there are very good webinars, for example, that Ish Mohit does, and even others on YouTube, like Parag Parag Fund does a lot of webinars. So a lot of these webinars are a wonderful place to learn. Many other, I think, investors also keep doing webinars. I think they're all great places to learn about the industry.
Okay. So do you go like X number of years back, like when you're starting with a new company, like you go like 3 years back, 5 years back to understand all the investment presentations, or recent like last 4 quarters will do for you? Like how do you?
I think the most important is the latest one for me, because we want to invest for the future, right? So I think that's like the most important. And there's this interesting thing called Pareto principle. The idea is that 80% of your uh, value will accrue from 20% of your actions, and then 20% of the value might accrue from the rest of the 80% of the actions. So that's true for, I think, most people. And the latest con call, latest investor presentation, latest annual report, and then I will probably go back maybe a con call 4 quarters ago, a con call 8 quarters ago, and then I'll try to fill in the gaps by listening to all the con calls. For example, in Webhub Global, I listened to latest con call, latest investor report, latest annual report, and then I went maybe 8 quarters back, random con call, then maybe 8 quarters back, random con call, and then I started listening to them one at a time to incrementally fill in the gaps.
And overall, does it take like a month or two for you to understand a new company, or like with that approach you are taking like 2 or 3 hours per day?
The thing with that question is that it really depends on the company and the investment. It's not, I think, another thing to, I think, keep in mind is sometimes valuation actually discounts a lot of things. And at least one thing that I've started practicing, and of course this is not financial advice, it just works for me, is that when I'm studying a company, I prefer to have a position, small position, then start in studying for two reasons. One, it gives me skin in the game. Now I have my money invested, I better read about it fast, I learn a lot, and figure out whether to own it or not own it. That's one. Second thing is, especially in this kind of a bull market where everything is rising, uh, margin of safety can vanish in a week. So if this has actually happened for a company. When I started studying it, it was maybe at 80 rupees. By the time I finished, it became 200 rupees. And now there is no margin of safety. So now I prefer, if I'm even starting to study, if I see some initial uh, positive trends, I will take a small position, study, and then maybe pyramid up if I have conviction. But I hope that answers.
Yeah. Okay. Thanks a lot, Sahil, and thanks a lot to Ish Mohit and the entire SOIC team. And also this feature of asking questions is really good. Yeah. Thanks a lot.
Thank you. I think one more basically way that I personally prefer to read upon companies is that I have a lot of time. So I just sort of like even to download more and more business histories. So suppose let's talk about PI Industries. So I just read PI Industries value picker thread since 2011. I got so many insights. Then I read con calls and stuff. Most of the alag hi tha. But whenever I'm sitting idle, either my hand is there on like reading value picker threads or sort of some interesting Twitter thread. So that is also a good part of time allocation, because suppose if I want to read about shrimp industry, I might as well read the thread of Avanti Feeds of last 10 years, because those people were actually invested in the stock and some of them even made 200, 300 barrels over there. So their information will be a lot more refined because paisa laga hua tha. So that also helps you to shortcut the journey of research.
Yeah, absolute huge plus one to Ish Mohit. I think I missed saying that. Value picker threads are a gold mine of information, like he said, and it shows the evolution of the company and the investors' reaction to the actions of the company and how their conviction sort of changed with the price or with the different performance. And for example, a lot of people rightly have concerns over red tapes, corporate governance. I would urge all of them to go and read Relaxo's value picker thread, and you will see the kind of thing which is happening in red tape has happened in other companies also. And I'm sure similar kind of like evolution of companies we'll find in a lot of those threads.
Right, right. So next question we have from Aditya Patel. I'll just a second. I just unmuted your line, Aditya. You can ask your question. Right. You can unmute yourself. Right.
Thank you, Ishmohit and Sahil. I just had a simple question. Since Sahil, you are working full time in Google and you will be having regular cash flow from your job salary. So where do you park this money when there is not ample opportunities to invest that capital, or in a bull market when valuations are little stretched, so you wouldn't be able to add to your existing positions. So where do you park that money for that?
Thanks for the question. And the reason you see me smiling is yesterday someone asked me a very similar question on Twitter, which I already answered. So I have a pre-cooked answer for you. There's this guy called Jim Cramer in the American markets. It's his famous dialogue that there is always a bull market everywhere. And then if you take Charlie Munger's insight and you invert it, there is always a bear market somewhere. So you just have to find that bear market. You have to find that place where value exists. My point is, you will always find something where there is value. You just have to look hard enough. I'm sure like Ishmohit has talked a lot about this, but financials, lending, especially capital goods, US mid-cap tech, some of the company prices have crashed 75%. They were overvalued to begin with, but I think now they're in a place where if you do deep research, I think it's possible to own some of them. So I'm very excited about them. But to answer your question, this has never happened to me that I don't have an opportunity to invest in. There's always somewhere to put money.
Thank you. That answers my questions. Thank you.
Thank you. So next question we have from Nitesh. So Nitesh, I've just unmuted your line. You can ask your question. Right, I think Nitesh didn't ask. Right. I think he left. I'll just search. He's there. Right, just unmuting your line again if you want to ask the question. Just Zoom is a bit right. Yeah, I've unmuted your line. You can ask the question.
Ishmohit and Sahil, hope I'm audible now.
Yeah, you're right.
Yeah.
Okay. So my question to Sahil is that I have gone through the full presentation. I got to know that there should be a time balancing between your study part as well as your professional life as well. So I just want to know that in this particular area, when exactly do you do the practical implementation on the investment side? So my question is straightforward, that you have do a lot of analysis on any business, but when exactly you are following the same thing on the implementation side, that you are analyzing the pricing, the kind of action, the price volume delivery kind of action on weekly or the monthly. So my question is totally on the implementation. So how exactly you are following it?
Sorry, I didn't understand the question actually, because I thought I had talked about the implementation, like a day in my life part, where I've talked about the fact that I'm listening to con calls, reading investor presentations, and in summers annual reports, all while doing my 2.5 hour morning walk. And
I think if I got the question right, so the question was key, like the process of portfolio allocation, like buying, selling, and holding bit. Like when do you actually pull the trigger? If that is correct, Nitesh?
Yeah. So my question is that when exactly you are going into the business, and when exactly you are trying to pull it out from that?
I think you're talking about like buy and sell, right? Like I think the answer there is very simple, and I come back to the same thing, Pareto principle. Especially if it's a simple company, you should be able to understand 80% of it, in my view, with like the latest annual report, value picker thread, latest con call, latest investor presentation. All of these things together will probably take not more than 1 week, in my view. So 1 week is like the upper bound, because you've already read through many years of history, most likely. So the point is, once you have read through, you will have a very good idea of the risks. You'll have a very good idea of the reward. You'll have a very good idea of the tailwinds, the competitive advantages. And once you have all these numbers or these thoughts in front of you, then you can take the decision to buy, basically. The idea is, when you think that you have understood the company well enough, and I showed some aspects, right? For example, durable competitive advantage, longevity of growth, tailwind, profit trigger, growth trigger. When you have something for each of them, yeah, I understand this, I understand that, I understand tailwinds, I understand competitive advantages. When you have a yes for each of them, then in my view, it's like, now I understand the company, now I can invest. And my rule is, I only want to understand it 80%. And then I can start taking the position. And then, of course, you have to go deeper and keep continuing to research it. Even with Newland, I probably researched it for 3 or 4 months. For example, one thing I did is I researched each and every API that they make individually, including how complex it is, how many competitors it has. That were like 70 APIs. That thing alone took 1 month, or maybe like 50-60% of 1 month. The point is, I didn't wait to do that to invest. I had already started investing. And then as the conviction increased, I might have increased the position size.
Okay. Thank you so much.
Yeah.
I think this, not to discourage you too, so it's also dependent upon the complexity and simplicity of the business. So
Right.
suppose if I have to just research on PIX transmission or an Everest Kanto types where there is only one product to research upon, so your job is much easier basically.
Absolutely.
So next question is from Yash. So Yash, I've unmuted your line. You can ask. Yash, I've unmuted your line. You can just click on unmute button from bottom left of the screen. I think he's unable to unmute, or he might have left. Right. So, just a second. So moving on to the next participant, Yash Sidani. So again, just a second. Yeah. So moving on to the next participant, Abhishek Singh. So I've unmuted your line. You can ask your question.
Yeah, thank you so much, Ishmohit and Sahil. Actually, I have two questions. I'll start with one. The second one, I'll check with Ishmohit if it's okay to actually go and ask it. So the first question is being on one of the posts which Sahil has sent on the Twitter regarding the RSL Gate. So I remember he has disclosed in what trenches he has created the position like on different times. So I was able to see chart over there. So just want to understand if he uses the technical perspective while adding the position, or he was just trying to show that on these and these, but when the price was taking the support on the 50 EMA, that is what he was trying to. So basically just want to understand that, okay, why exactly the chart was there, or the technical perspective.
I don't remember, to be honest, but
okay.
to share with you, like, I don't have any knowledge or understanding of technicals. And the reason I don't prefer right now, at least, is I still feel I'm a noob investor. I have so much to learn in investing. Once I feel like I have mastered it, maybe 10 years, 20 years later, or earlier if possible, then maybe I'll start reading about technicals. But one more thing I want to point out clearly is that technicals will be positive only if there is some consensus among buyers, right? That's what technicals show, that everyone is bullish now, suddenly, at least in the short term. So to my mind, I'm looking for the company that is not owned by anyone, or that people are not caring too much about. So it sort of goes slightly contrary, but like, what I'm looking for are the breakout on the business, not on the price. So if I think that the business will do well, then I'm happy to buy regardless of what the price is.
That does make sense. So just a follow-up question on the same. So what is the top-up policy? Like in the beginning, do you make like just close to like, just close to 25% of the final allocation, what you want to give, and then you top it up, or you start with a very, very small allocation in the beginning of a target allocation, and like then you take it up?
I think essentially the reason we can't, at least in my view, have a formula approach to this is every company, every opportunity, even in the same company, every opportunity to invest is unique. So we have to understand sort of the risk reward trade-off. And like I said, right, corporate governance concerns, and so many things have to be thought about. So that's why, like, I don't have a fixed number or anything like that. I generally try to buy in 3 to 4 tranches spread over a week or something, not like in a single transaction. But at the same time, like, I'm not following a formula or something. It's just to get over any biases. Like, I don't want to, let's say, invest all my money today and then see it go down 20%. So I might buy over a week or two slowly. But at the same time, more than that, I don't really have a thought, well-formed thought there, that like I want to buy 25% today and then. And another thing I want to point out, especially for young working professionals, there is always more money to deploy. Every year I might generate 30%. Hopefully, if I'm getting promoted, 30% more capital every year. So I anyways have to deploy more money, hopefully to every position. So that pyramiding up has to continue throughout the years.
Yeah. So okay. So thank you so much for that one. Just one more question. So just want to check with Ishmohit if it's okay, or should I come back?
Yeah, please ask.
Okay. One quick question is about basically, like, what is the USP on which you work on? So one thing which I observed from, like from what you're trying to convey to everyone is like, you have to be curious. So that is one thing which I totally got, that, okay, you're curious, and that can be one USP from your side. But what is that one other USP which you can say, which is giving you I'll say the investing edge when you do any kind of investment?
Yeah, thanks. I mean, please go on, Nishma.
I think it's for Sahil or it's for me, Abhishek?
This is actually for both. So like, it depends on you guys.
Sahil first, please. You can take the question.
No, actually, like all that I'm saying is fascinatingly, I don't think in investing, investors need a USP per se. What they need is to have a good process. And then the reason that you win is by the virtue of the fact that most people are not willing to have that good process, because the prerequisite for having that good process is doing a lot of deep research. And that's what I've seen, that most people, but it's not just here, right? You can ask, let's say, Usain Bolt, what is your USP? The answer is he has probably worked harder than everyone else. And if you ask the top 100 people in that field, they'll have the same answer, that all of us have worked equally hard. Beyond that, it's luck, right? So I can't claim that I am the best investor or something. We have to have a good process, in my view, and do our due diligence, try to be as conscious about our biases and avoid those biases. But beyond that, like, the reason that we win or be able to do well is because, in my view, most market participants are not willing to do that. And it might be for different reasons. It's not, I'm not judging, I'm just saying that, let's say, people might have different considerations. Let's say microcaps are inefficient precisely because institutions cannot own them, right? That's just their imperative, that they can't invest in small companies. So that's okay. The point is, we can take advantage of that situation.
Sure thing. Thank you so much. Ishmohit, would you like to go ahead?
In terms of strategy, so I think if you ask anyone in business, or if you ask anyone in stuff, what is your strategy? The most common answer is to be the best, which I think is a flawed answer, because you need to have a focused, structured strategy. So just to give you an example, so currently we are focusing a lot on financials right now, right? And why are we focusing on financials? Because since 2017 till 2021, just in my opinion, a lot of those financials have been through a bear market. And even in the financial space, there have been some good financials. If I talk about like Bajaj Finance, or the housing finance company, like if I talk about Aptus or Aavas, especially if I talk about Aavas. So Aavas again has ended up creating wealth. So real knowledge of being like having a variant view with the market is to actually have your जो key variables होते हैं उनको अगर आप बहुत sharply learn कर लो. Like suppose if I keep talking about Equitas Small Finance Bank, that is going to hit 1.8% ROA by exit of Q4, right? But it is not priced like it is going to hit ROA of 1.8% by the exit of Q4, because people are generally averse to that space. जैसे उसमें थोड़ा सा मोमेंटम आएगा, टेक्निकल्स चलेंगे, people will go crazy after the thing, then तो हिस्ट्री के अलावा उसको कुछ और भी निकाल लेंगे. But the real time to look for such things, suppose if I talk about the example of Saregama, I actually started buying Saregama in January, right? And you just need to read and study the incremental economics of the business that is coming in. That is like a 50-55% EBIT margin business if they stop the content charges, but it wasn't priced like that. So this thing can only come if you're curious and if you really appreciate the variables. So like I think Sahil bought Mastek when it was very cheaply priced at 800 or 900 types. Right now, at that price, the market wasn't baking in the continuation of a 30 to 35% growth and incremental deal wins. But that ended up happening because like the business in UK has been their bread and butter since 95, 96. So appreciating those variables becomes very, very important in fundamental investing or in investing focus more towards business analysis beyond just reading annual reports, in my opinion. So the more you read across the sector, the more you'll be able to appreciate those variables. Like Healthcare Global is one more company. Like people don't want to look at it because PE पे महंगा दिखता है. But if you look at in terms of free cash flow basis or enterprise value to EBITDA basis, or how hospitals are valued, you can easily assess what has actually worked in hospitals, how hospitals have made money. No, people say hospitals are asset heavy businesses, but Apollo Hospital has been 100 bagger, right? Why is it 100 bagger? Why does Max Hospital do 32% ROC? So there are deeper reasons behind it. If you can catch that in a tier 3, tier 4 player, or even a tier 2 player where it is graduating gradually, then you end up creating a lot of money because institutions start coming in when things start looking a bit more kosher, basically.
So I think one key, one key takeaway which I'm trying to understand from both of you is that like nowadays, whenever retail investor, like they go ahead and simply buy a position into one of the big companies or like one of the very good companies, which is going across some kind of tailwind or a structural change. So what happens is that they jump into like a long-term investor. Then they see some profit over there in the terminal, like say suppose 5,000, 10,000, 20,000, and then the whole greed thing comes in, and then they start thinking like a trader that okay, now like they have to protect their profits. So then they simply exit the story. So I think that is also one thing which we have to take care, right? Like being a new investor, that if you're jumping in like a long-term investor, you have to stay like a long-term investor and rather not think like a trader.
I think it really depends. Suppose even if I'm a long-term investor and shit hits the fan, so again you have to be flexible enough. Don't give yourself tags. We focus more towards long-term, but don't give yourself tags, because if you tag yourself, and what happens with tagging is कि मैंने बोले दिया मैं long-term investing कर रहा हूँ, but something blows up in some company, right? So I can't just sit through it if I face a permanent loss of capital. So I have to be flexible enough to change my mind. So I think particularly if I just talk about myself, see if you're investing in mid and small caps, I don't know about Sahil, even Sahil might discover this, 25 to 30% churn is very normal, right?
Yeah, just to add a small point on that, I don't think it makes sense for anyone to invest on borrowed conviction. It can't end up doing well because like we discussed, some of these have huge volatility. Even if the business is doing slightly bad, the price might vary 50%. And then like, what will you do, right? So my thought process here is that for an investor, it either makes sense to put effort, or if your circumstances don't allow you to, then invest in mutual funds. I think that's a very good alternative in my view. What doesn't make sense is to borrow conviction, because that can't end up doing well.
Right. So I've just unmuted your line, Amin. You can ask the question.
Yeah, thank you very much, Ishmohit, for the opportunity. For the first time I'm getting a live opportunity. Thank you for all the effort that you've been putting in. And thank you very much, Sahil, for your open and honest views that you've expressed throughout the webinar. It was a great learning. Even I have two questions, and if Ishmohit is okay, I'll go ahead with the second one. The first one, Sahil, I have for you, basically. I had raised this to Ishmohit some time back as well. I basically hold a zoo of stocks, like you said. While I hold, when I say zoo, it may be, say, 100 in number, and with a deep conviction in each of them, which may not be true. And as you mentioned, I try and take some stake in them to have some skin in the game and be interested in them. I just wanted your views. If you have some broad frameworks that helps me zeroize that from that high number to maybe a 25 or 20 or the ideal number which works out. It's very, I find it very difficult because I would have diversified using sector, the industry, the market cap, and I've diversified it maybe too well, is what I believe. I may be wrong on that. So any views that you would have on that?
So actually, one thing we should think about is why is diversification even important for us, right? If you think about it, promoters have all their money in one company generally, and they do fairly well for themselves. The key difference is A, they have operational control over the company, so they're able to control exactly how it does. That's one thing investors generally don't have unless they are really, really big investors. The other thing is it ensures that we don't have to put all our eggs in the same basket. So to that extent, yes, it makes sense to diversify. The only thing with 100 companies is, at least to my thought, it's hard to track them closely or deeply. You might feel that you have deep conviction, but if you really ask yourself, why do you own it? And you are not able to convince, let's say, some investor, some fellow investor, then I would say your conviction might be lesser than you thought. And the way to get rid of it, in my view, is to do brutal prioritization, the thing that we discussed, which is, and I do this, I'm sure Ishmohit does some form of it in his own way, is for every company, you need to ask yourself, what kind of profits can it grow in the next 3-5 years? What kind of returns can it give it to me? Which is asking about the profits and the valuations. If you're buying a company growing profits at 20% at 100 PE, might not generate very good returns for you. So you have to ask those questions. Try to put a number to it. And at the end of the day, like the guru of valuation is Professor Aswath Damodaran. He says this as well, that like valuation is numbers, but we have to find the narrative behind it and convince ourselves about the numbers, right? The point being, that is where the deep research comes. Anyone can write numbers in Excel and say 15% growth, 20% growth, PE goes from 10 to 20. But where is the conviction coming from for you to say that? That is what you have to find. And then keep forcing yourself that, no, is my number correct? Am I sure about this? And do this for each and every company. When you do this for 100 companies, you'll realize there's a wide spectrum. There might be some companies where you're expecting 3% return. There might be some companies where you're expecting 30% return. There might be companies which have much better predictable cash flows, variability is less. There might be companies where the possible set of outcomes is much larger. And then you can make your trade-off that this company, but just to be clear, I'm not giving financial advice. I'm just explaining how I would have done it for myself.
Yeah, thanks, Sahil, for that. Ishmohit, is it okay if I could ask one more question?
Please do. No worries.
Yeah, thank you. The second was, Sahil, my thoughts around investing in different asset classes, like what you talked about. So maybe I have this is a personal problem at my end, wherein I tend to get married into too many things too quickly. But when I say asset classes, so I would like maybe equity, then suddenly you'll see maybe you can look at gold, or you can look at US INR, or you can look at maybe crypto. And then, as you said, there is a bull market or a bear market everywhere, and you keep on switching in a timely moment, which may not always be possible considering the time and bandwidth that we have as professionals. So just wanted to have your views on them. At once we say we know the narrative and conviction and we want to be there, and at the same time we want to be in the right place at the right time and then make most of it, and then that maybe lands up in a mess for us at times. Just wanted your views on that.
I want to thank you for that question. And I want to start by saying that one of the most important biases that everyone should probably know about is something known as egocentric bias. And while you were saying this, I was Googling because I don't want to sort of say a wrong definition. Egocentric bias is the tendency to rely too heavily on one's own perspective and or have a higher opinion of oneself than reality. You can apply it to your investing as well, right? For example, for a very long time, I might have been egocentrically biased towards IDFC First Bank. And I have to be cognizant of that, that maybe I'm egocentrically biased. Maybe I need to have lesser conviction than what I have right now. My point is probably recognizing the problem is 50% of the job done. Because then you can recognize that maybe I don't actually should have that much conviction. That's first. Second thing I would say is between different asset classes, you can find very, very long-term studies because some equity markets have actually existed for 200 years, right? For any long duration of time. Equity is the only class that creates wealth because it is backed by hard assets that earn money. Any other asset class you talk about is basically a trade, basically. USD INR is a trade, Bitcoin is a trade, gold is a trade. All of them are trade. There is no asset per se because you're not earning money. So at least my personal philosophy is I have some money that does not take risk. It's in bank FDs, and then some money which takes risk, and all of it is in equity. I don't have a crypto or Bitcoin or any of that. So, but just to be clear, I'm just talking about my use case, and the only thing I would say is try to research more and read about them. At least I am not convinced personally that it makes sense to put money into any of these other asset classes apart from equity, and then some money in debt, which is fixed deposits, because that's less risky.
Fair. Thank you very much for your time and views on the question, Sahil. Ishmohit, one small request to you. If you manage to get some time, I have sent you a mail, and if you could reply to that, I'll appreciate a lot.
Definitely. I'll just look into it.
Thank you.
I mean, if you can post that on SOIC continuous classes, because every day, like I spend almost 90 minutes just answering those questions on continuous classes. Email, sometimes it becomes challenging because वो बहुत सारी चीजों mix हो जाता है कभी-कभी.
I will do that today itself, Ishmohit. Thank you very much.
Thank you so much. Thank you. Right. And so next question, I'm just unmuting Achinto, so you can ask your question. If I got the name right, sorry if I got it wrong.
Good afternoon, Ishmohit and Sahil. Is the audio okay?
Yeah, audio is perfectly all right. Good afternoon.
I have joined very recently to this your tribe, Ishmohit, and I from the core of my heart, bottom of my heart, I thank you and congratulate you for the excellent job you are doing. And Sahil, I have been a working professional. I've been working since more than 20 years now, and the relevance of today's webinar cannot be overstated. Thank you very much for this session. And I also would like to, Sahil, you are so young, and I really congratulate you both, Sahil and as well as Ishmohit, for your clarity of thoughts in different topics you do, and you are doing a marvelous jobs. And please keep doing great things. And I'm sure that in process we will also benefit also from your wisdom, and we will also contribute to your what should I say, cumulative pool of knowledge in whatever small ways possible going ahead. And I feel so tempted of asking so many questions, but I fully understand that Sahil ka to koi problem nahi, he eats only once in a day. So, but Ishmohit has been busy since morning. I will not take much time. I'll limit my questions to only 3. Number 1 is that I fully agree on your views on Saregama and things like that, huge entry barrier and clear visibility. As you were saying that you entered the scene when the PE was 30, today it is 70. You may be comfortable at 120 also, understood. But at the same time, valuation gives you some comfort. I hope I have got your feeling right. Like if you are entering the stock at a valuation of 30, you feel more comfortable if I have entered the stock at 70, of course. But over a period of time, if the market में अगर if there is a huge tailwind will continue to be there in the market in terms of huge potential growth ahead. Now, so what I wanted to ask you is that see, if I would have entered the scene at 30p, obviously my conviction would be much higher. I have just entered now at a PE of 70. So naturally, थोड़ा अभी शुरू में थोड़ा सा I will be feeling shaky. If because the share is so illiquid, if it goes down 20%, 30%, I probably will not be able to sell it off. But that is one question. Like how मतलब ये आगे जाके कैसे ये conviction को retain करना है, and whenever we are having a journey. Like we are having a visibility of maybe 50 meters, but when you are going ahead another 50 meters, naturally we will be able to see further 50 meters, ahead. So that is one question. Like I have, entered Saregama very recently, and I personally I have seen that similar, if motamoti similar, maybe not exactly identical, similar modes are available in the valuations of in the business model of IEX and CDSL also. I will definitely also request you, either of you, it may be a discussion, like how do you see the valuation or the runway going forward? Because I personally see all these three are having similar, set of mode, at least for years to come. And this is my first question.
Thanks, sir. That's a very good question in my view. One thing I want to definitely point out here is all the stories we say around the moat and all of that, in my view, is just a story we are telling ourselves. At the end of the day, the valuation is given by the stock market as a collective, right? And the problem with that is it's like trying to predict the madness of men. I don't think anyone can do that. Even at 30, the moat was the same. At 70, also the moat is the same. So at 120 also, it will be the same moat. So that same moat is now valued higher. My point being, I don't think anyone can really scientifically show how multiples can evolve over time. We can look at patterns. We can say a similar company in the past has done this or something, but it's not possible to predict. And in fact,
correct,
the reason I know this now is if you look at the way that tech in US has reacted, just look at any tech stock you want to see. All of them have the same mode, all of them have the same growth, but look at the way the stock price has behaved. It has, some of them have fallen 70, 80%. Look at the stock price of Zoom. We are on Zoom right now. Let me
correct.
quickly.
It has halved. It has fallen to around 150, 152. Yes.
Yeah, 150 from around
300,
560. 560.
Yes.
So it has fallen
Okay.
around 70, 80% in a matter of, I think 5-6 months, something like that, maybe 4 months.
Zoom had a very low entry barrier. I think you are absolutely correct. Like absolutely.
But sir, my point is slightly different. My point is entry barrier might be there, but the stock can still fall. And I'm sure you can find examples in many other companies. One of the companies I'm researching is Schrodinger. Schrodinger is doing such a thing, you will find hardly any company doing that thing. And still the stock price has fallen 70, 80%. My point is the entry barrier and all that are narratives that investors are telling themselves to build conviction. But at
Correct.
the end of the day, the multiple is very hard to figure out in the future that like, this is what it will be. And it's controlled by many variables. For example, what the Federal Reserve is doing with interest rate controls the multiple of Saregama, controls the multiple of Zoom. Reason
Correct.
that's important is that's why I feel like the low valuation gives me a margin of safety. And that's why I personally would not be comfortable owning, like deploying fresh capital into Saregama at this kind of valuation. So my point is, I can't justify something that I wouldn't have done myself. So
Correct.
like
Correct.
my point
Absolutely.
is, why even go into a water which is hard to justify, which is making you feel uncomfortable? Why not go into the water which is easier to justify? And like we discussed, there is always value somewhere. Currently, in my view, and probably Ishmohit and many other investors, that value isn't financials or lending. So why not go there? Why not go to the ignored sector. Why focus on the sector that everyone has agreed to? Because in my view, the margin of safety is lower for those companies.
Correct. That is absolutely. I just sorry, what you have led to something else. Like for financials, I was thinking like the debt equity ratio of the entire market has gone down significantly. Like it has gone down by 50%. So still people are there are contrarian views what you are taking, like financials will do well in the coming months. But slightly I was thinking like there will be, I think, headwinds in the market. Like, do you really think that इतना ज़्यादा capex cycle चालू हो जाएगा अभी, especially in this private sector?
So let me sort of, Sahil, so just
Yeah.
Also, I hope you don't mind if I take a quick bathroom break while you're answering.
Absolutely. Yeah.
Sorry for that. I'll be right back.
No worries. Take your time. Right. So just as an example, I still remember the information technology sector in 2017. The stocks didn't go anywhere between 2016, 17, and 18. Well, all these tier 2, tier 3 mid-cap IT stocks, Coforge used to be NIIT, and Larsen and Toubro Infotech, all these stocks were trading at 13, 14, 15p, maximum 20p laga lo. And all these big investors were coming on forums. So let me give you an example. So Motilal Oswal ka wo wealth creation study होता है, right?
Right.
तो वहाँ पे on that wealth creation study, Sanjay Bhattacharya came with Ramdev Agarwal, and both of them sort of talked about this, ki how Infosys has lost its magic and how the entire Indian IT system has gone for a toss. कि अब growth यहाँ पे आएगी नहीं, कुछ होएगा नहीं, वो नहीं होएगा. Because stocks didn't perform for last 2 years, so that is the recency bias that comes even to the best of the investors' mind. Now we know what has happened in the IT sector for the last two years, right?
Right.
So I think financials, a growing country like India and financials won't do well. I think that is mostly narrative, because for last 3 decades they have done. So we are sort of saying ki last 1.5 year ka performance is greater than last 3 decades performance. I think HDFC Bank, it grew its PAT by 18%. ICICI Bank results, you'll see it will grow by 22% types. So I think problem क्या है कि sentiment खराब है. So perception to earnings ratio में earnings will start, because perception कब खराब होता है? When earnings take a hit. Right? Such is a मतलब इतना अच्छा relationship है दोनों में कि perception takes a hit when earnings take a hit. Right?
Absolutely.
But if you feel that earnings haven't taken a structural hit, it's a temporary phenomena कि वो balance sheet पे, income statement में जो provisioning हुई है इस time पे, that's a temporary phenomena. And if that comes back after 12 to 18 months and earnings go up, but if you're early in the journey of perception cycle, then you stand to make disproportionate returns, like many people have done in IT. So a friend of mine, he bought Tata Elxsi in bucket loads in 2019. He's like, it's a structural tailwind business. लोगों को इसको समझ नहीं आता कि short term contract cycle पे चलता है. इस वजह से I think 2 quarters का result खराब आया था Tata Elxsi. The stock fell by 55% because they were dependent on auto and they were already basically automotive से de-risk कर रहे थे. So in 2 quarters of bad results, stock fell by 55%, and he just bought in bucket load. It was a 30% position for him because he really understood what he was doing. And I don't know, maybe sitting on a 10 bagger right now, more than that. In 3 years, it is, I think, quite good what he has done. So thoda problem रहेगा, because perception is against you in such companies or in such sectors, because everyone will be saying, everyone will have a view. But I think if earnings are intact, or if the structural trend is intact, then you should really sort of differentiate between the noise and the signal.
Right. Very well taken. And I think you are absolutely, now I see your logic, what you are saying. Like this structural wind will also slowly change over the next 1-2 years. Again, the focus will come on to financials. Absolutely. You are absolutely correct. Yes, I see your logic now. Ajay, second, hello.
Right.
Yeah, can you hear me?
Yeah.
Another question I was thinking I will ask, like, see, investment has got several parts, like first, having the vision to know that certain company like RACL or Schrodinger, as Sahil was telling. It would have been better, like, if Sahil would have listened to this question. Anyway, you are also there.
I'm here, sir.
Okay. Don't please call me Ochinto. Please don't call me sir also, because otherwise I will also start calling you sir. see what I was asking, like first what I understand is that first I must have a vision that this company exists in the first place. Then I start doing all the studies and all that. After that, when I am reasonably having conviction, then I start taking position in it. And then the question of patience comes, and I understand the flow, thanks to your I have recently started following Sahil maybe a couple of days back in Twitter. Like I have just joined SOIC right now, and I have been following Ishmoit also for the last 1 month or so. Another question is that the first part, like you came to know that RACL exists. ये कहाँ से मिला आपको? How did you get that idea? Like I'm asking the same questions to both of you, and this is my query. Like how do you know that ये company का अच्छा है? उसके बाद तो after studying and all that thing, वो वाला तो ठीक है, वो तो that is manageable. But first having the vision is having a creative part of it, and वो कैसे आएगा? वो मेरे को आता नहीं. That you guide me, please.
Sir, I hope you don't mind if I present my screen once. Are you able to see?
Yes, yes.
So this is literally the pinned tweet on my profile, because this is what most people care about, which is how do you find companies, let me zoom in, how do you find companies to invest in, companies like RACL, like you said, or PICS.
Yes, so yes, okay.
I've talked about this in depth, but I'll just repeat it once. I'll stop sharing because I want to talk about it rather than just present.
Sorry, I don't want to waste time for others. I can go get into your Twitter and find.
Yeah. No, that's okay. That's okay. It's still worth repeating, because many people might not be on Twitter. So we should not assume everyone is on Twitter. So my only point was that what you have said is a very important question. That is what most people ask. It's the right question. And at least to me, the answer is there are two ways, at least to me. First is the quant way, which is on Screener, we can create screens to look for companies with certain characteristics. Let's say you want to see a company with profit growth, then you will see on Screener that in the last 3 years, profit should have been growing 15%. You can ask for that screen. And then you can say, in addition, sales should have been growing at least 10%. So not only profit, but sales are also growing. You can say that PE ratio should be less than 30. So you can actually create a screen that way on Screener. And that can help you get companies that fit your criteria. That's one thing. I think that's very important. Because it sort of allows you to look for companies with the characteristics that you want to look for. For example, companies which are profitable, companies with growth, companies with dividend, companies with less debt or more debt, anything that you want, you can encode it in a screener, that characteristic, and then look for companies of that kind. That's one way. The problem with that approach is that by the time the results reflect in the numbers, generally the company price has already shot up by the time that the P/E ratio or the ROIC and all that is happening, right? So the other way is we have to always keep our eyes and ears open and listen to all viewpoints of all people. The good thing now, in my view, is places like Value Picker, places like Twitter are so full of so many people that are willing to work hard. All of them are sharing ideas, left, right, and center. And at least to me, the purpose of following those people is to get the initial idea. It is not to borrow their conviction. Once I have read about the idea somewhere, then it is my idea and I have to research about it.
Absolutely. Yes.
Just to give an example of Saregama, right? Since we discussed Saregama, I didn't know about Saregama. I first got to know through Ishmohit, through his video on SOIC channel. Then I got to know that Saregama exists. Then I started researching on my own, and then I built the conviction that this makes sense. My point is, just like this Ishmohit's channel, there will be probably 5-6 other people at least who are sharing ideas, if not 10 people or 30 people. You can listen to PMS managers. You can see Value Picker forum. There is always discussion going on every day about 20-30 companies. So if we just look at all of those places, we'll always find. Another thing I want to importantly point out is that over time, we will build mental models for who is a good stock picker. I have built my own mental model that this guy is a great stock picker. And then what I can do is go and look at his portfolio on Screener, on Trendline. I'm not taking any names because I don't want to put anyone in the spot, but let's say some X guy, I look up to him. I think his investing style makes a lot of sense.
Got it.
His portfolio. And this thing is known as smart cloning. The point is, I'm going to clone, but I'm not going to clone the conviction. I'm going to clone
Yes,
the idea, the fact that he's investing.
correct,
Right, just
absolutely.
to add to Sahil's point, Achinto, so like on SOIC continuous classes, so the module 2, it's a 2-hour class on just how to filter on ideas and which investors to follow. So I've actually filtered down on people that I personally follow and those who are smart stock pickers, and how to actually get an idea on what they own.
Absolutely. Thank you so much. I'll definitely do that. I have got a, yeah, please.
No, sorry, Achinto, I was just saying, like, definitely a good starting point will be for you to go through all SOIC classes. I'm sure you'll get like 99% of the questions answered.
I just small, another, if I am permitted for a third one, is I understand that everybody says management and their credibility is very of paramount importance. And we are very small investors, maybe having hundreds or thousands shares of one company. Now we are also busy in office works and other things. Actually, management kaisa hai, interacting with them, but how is it possible? How do I know? For example, I was just doing some study, and I found this Sequent as well as Newland very interesting. So I started thinking. I went through all their con calls and everything. I also started up, getting a feeling that yes, they sound good and all that. But how to actually get an idea that ये तो Newland वाले तो बोलते रहते हैं, they blog and all that. It's possible to get filler on that. But there are certain companies very difficult to understand जो management का credibility क्या है नहीं है. How do we get over that problem?
Yeah, thanks for the question. Like, I have to say, like, this is a really important point, which is how do we figure out the management credibility, right? Unfortunately, I don't think there's a shortcut to this. We have to understand if the management is walking the talk. We have to look at their past guidance and match it to their future actions. That, like, let's say in the future past they said we will grow at 15%, but they grew at 10%. They have clearly fallen short. Then we have to figure out why did they fall short. Was it some mistake of their own? Did the overall tailwinds go away and headwinds came in? Uh, I don't know if Achinto is still there, but
I think right.
Okay, he's there. He's there.
Yes, I'm there. Yeah.
Okay. So I was just saying that basically we have to see if the management is walking the talk. That's like there for sure, like the bare minimum. Apart from that, in my view, we have to do the forensic analysis to figure out how they are deploying capital, how their capital deployment is. Are they benefiting at the cost of the minority shareholder? And then we have to figure out how does that really make us feel in terms of ownership? Because another thing I've seen is that the textbook answer will be avoid all such companies. But to my view, that will ignore 99% of microcaps.
But just to add to Sahil's point, even while doing forensic analysis, I am of the opinion that do not go to like annual reports of last 2 decades. Every company will have some issue, right? Because no one knew the importance of market capitalization before 2010, 2011, when the second generation studying out of studying in Western universities started coming back. So I think it is very it's a big time wastage to study annual reports from 2000 to 2010. I am personally of that view. मैं last 4 or 5 years से उससे ज़्यादा annual report पढ़ने का sense भी नहीं बनता, because that is the idea that you need to have about a business. Like that is mostly about it.
Right.
And so
Thank you.
Just to add to Ishmohit's point, because I think this is important point to make, which is if we read through many companies of that type, then we will figure out what the pattern is, like how do these things evolve. And I would think that it makes sense to look at like all the different case studies that Ishmohit has shared in the course, and maybe some value picker threads for many of these companies. Then you'll actually see how it has evolved over time, what kind of companies do what kind of naughtiness, and how it impacts the market cap.
Right. Thank you so much for both of you, and please keep doing great things. And over the last 1 or 2 months, couple of months only, I have learned a lot from both of you, and I'm sure that you will learn a lot in future also. Thank you so much.
Thank you, sir. Thank you.
Thank you. Going to the next question by Pradeep, Amit, Akshay. So, Sahil, we'll take 4 more questions, right?
Sure.
Great. So, next question from Pradeep. So, Pradeep, you're unmuted. Right. Yeah, Pradeep, you can ask your question.
Yeah. So my question is around, there are many blockchain solutions that we are hearing. They are claiming that, they're claiming about distributed finance, and they are saying that they can disrupt financials, brokerage firms. Also, there are many NFTs, they are saying they can claim, disrupt this Saregama and all. Keeping your crypto aside, how do you see these blockchain solutions kind of giving a top competition to the conventional way of finance, banking, and other solutions?
Yeah, that's a great question, and I would like to sort of broaden the horizon of that question a little more. The important point you have brought up is that I also agree with your implicit view in the question, which is any business in the world can be disrupted, and we must remain paranoid to understand where those disruptions can come from. That is another reason that, at least in my view, investors have to remain curious and like a constant learning machine, right, throughout their lives. And I will be very honest with you. I haven't studied blockchain very deeply, so I can't answer about that specific technology. But the very little I know, it's not that easy to disrupt Saregama despite blockchain and all that, because whatever can be done without Saregama would do it better, basically. So that's the value that they're adding. As far as broking and banking, like one thing I want to point out is, as far as I've seen, 99% of people that express views on these things don't understand them, because they might have read some article or some book. They don't have technical knowledge. The only way to have technical knowledge is to read the fundamental research. So, for example, Bitcoin is a technical paper. You have to read that paper, that computer science, understand, then you can claim I know Bitcoin. My point is, most people are just sort of propagating narratives. I would not go by that. Whenever I feel motivated enough, I will read the underlying tech, and then I will be able to answer. So until that point, I am sorry, I can't answer.
Yeah. Okay. Yeah. Thanks. Sahil.
Next question we have from Amit Desai. So Amit, I'll be just muting your line. Right. Yeah, Amit, you can ask the question.
Yeah. Thanks a lot, Ishmohit, for getting Sahil on the platform. You've already been doing a fantastic job, and Sahil, excellent presentation. Really enjoyed it. Just a couple of questions, Sahil. You told me that you really look at valuations. Valuations are important to you. Quality at any price does not suit your investing style. I agree with that. But a question related to that is, if I can just give you an example of DMart. It has always been expensive. People have not bought it because it was always valued highly. Some people who bought it have sold it after a couple of years because of high valuations. It has continued to become even more expensive. High quality of earnings, long runway for growth. How do you decide on such companies to pull the trigger and to sell your holding? That is one. Yeah, and I've got a follow-up question also.
Yeah, but let me answer that, because I'm very bad with memory, so I won't remember the second one. Thanks. That's a great question. I'll answer it in two different ways. First, I don't know if you've seen Ishmohit's webinar on low float stocks. You
yes,
definitely should.
I have. Yeah.
Because that, I think, explains a lot about DMart especially. But the second thing I want to point out is, we don't have to attend every party in town. Let's say there are 10 parties going on. I don't have to go to every party, right?
Right.
When I have comfort, when I have ball in my zone, I'm going to hit it out of the park. But I'm not going to chase after every company. And the point is, like, DMart investors can happily make money, and I will be cheering them on. But I don't have to make money in every company, right? So
right.
That's the thing, right?
Yeah, but Sahil, but the question was, is there anything that you follow, if it is not DMart, any other company where you will pull the trigger, based on valuations?
Like I wouldn't, basically, because my thought process is even if God is running a company, I would not pay valuation more than what it deserves.
No. My question is, when would you sell?
Oh, that's a different question then. Okay, so then I think the question for us is, how do we quantify in numbers the quality of the business, right? And I think that's a very hard thing to do, because every business is unique. It will have its own competitive advantages, its own competitive edge period, growth period, right? So like we discussed earlier, Sequent and Polymed, I was uncomfortable owning at 70 PE, but Saregama at 70, I'm happy because it seems to have a longer growth period, longer amount of profitability. To answer your question, I think it's a bit fuzzy. I don't have a very well-defined answer for you right now. I think it's essentially a question of at what point do we say this is out of whack? And the thing is, it's a bit of art than science in my view, at least as far as my limited understanding goes. So it's about probability, right? At 70, am I as comfortable as I was at 50? No, I'm less comfortable.
Right.
At 100, I would be even lesser comfortable.
Right.
Everyone would have to draw the line at a different place.
Right.
For me, 70 is not where I draw the line for Saregama. I might draw the line at 100, but that we have to see.
Achha. And I take it that, some of these new IPOs, the new age companies with no earnings, or, a few companies with, hardly any earnings, but, trading at, very, very fancy valuations. These are absolutely a no-no for you, at least currently, given the valuations?
Absolutely. And I want to make a very important point here. My mind tells me that I should not be investing in these companies because of my valuation filter.
Right.
But at the same point, I have also seen counter arguments which claim that the competitive advantage is large enough that the valuations don't matter too much.
Right.
So the way I'm handling it is that what I feel are the best business models, I will own a very small position in them, maybe 1% of the portfolio.
Okay.
And I might own 3-4 such positions. And then I want to learn through the experience how they pan out. And then I might be able to give a better answer to that maybe 5 years or 7 years later.
Acha, okay, fine. All right. And just one more thing, Ishmohit, I follow both of you on Twitter. Ishmohit had tweeted some time back that allocation khas or baki sab bakwas, and I really liked that tweet of his. And a few days later, I tweeted something on that, and I tagged Ishmohit, just added something to it that ROIC khas, ROIC or allocation khas baki sab bakwas. And you and Sahil, you mentioned, you spoke about ROIC today, and that really resonated with me, and that's what that's why I mentioned my tweet.
Yes, absolutely. And it makes a lot of sense. The only thing I would urge all listeners to think about is ROIC for all our actions, like not just the company, but our investments, and most importantly, our time investments.
Yeah. And just one last question, if I may. Ishmohit, this to both of you. Sahil, anything, is there an upper limit you put on the PEG ratio, even if you like a company a lot?
Yeah, definitely. I mean, in my case, PEG is everything to me, because if there is no growth, then what am I paying the multiple for? Because I don't come from the camp I can have a 20-year view on a company. I don't have a 20-year view even on my life. 20 years ago, I didn't know where I would be.
Right.
So, and I don't think I know right now where I would be 20 years from now.
Yeah.
So I'm not comfortable owning a low growth company at a high multiple for sure, which is the reason I sold Sequent and Polymed.
So
Saregama has double the growth, so I'm giving it more legal.
So will you give it, something? So are you your upper limit of PEG? Would it be 1.5 or maybe even 2?
The problem, see, I see where you're coming from. The problem is, I think we have to treat every company with the sort of individual lens, because let's take the example of Saregama, right? It's such a unique business. If I just create a rule, then I won't be able to own this company which has extreme amount of competitive advantage in this industry, second only to T series. So T series is the best, probably in my view. Saregama is the second best. So I don't think a number would do justice.
Yeah.
I see where you're coming from, but like I don't think I can give a direct number. But of course, the higher the number, the less comfortable I am.
Yeah. All right. Okay. Thank you so much. Thank you so much, Sahil. Thank you so much, Ishmohit.
Thank you. I think just to add to Sahil's answer, so I might have a little different opinion on a few companies. So suppose if I compare something like a PI Industries with a Naveen Fluorine, right? Multiple is similar, I think not so long ago. But Naveen has been able to diversify into adjacencies like pharmaceuticals and different types of chemicals, whereas PI has been struggling since 2014 to get into pharmaceuticals. So for me, if I had to decide between the two companies, at least Naveen at least makes more sense to me when I compare it to PI Industries. Because if the growth deaccelerates on a high valuation base, then you get the painful derating. This has happened in PI Industries case once, where it fell from 55p to almost 30p, and it was a painful derating, 3 years. And typically in these companies, I mean, it is not that price derates; it's a time correction of 2-3 years.
Yeah.
Because since quality has been proven and strong shareholders are basically already there, but earnings are not growing, so this leads to time correction over.
Right.
But if the earnings are really strong, suppose Naveen or Saregama, like if we talk about Saregama, so to me, see, currently if they exit the year with a 250 crore EBIT types, and if they say they grow at 30%, right? So you can just assume that next 4 or 5 years mein, they'll be doing 700 crores of EBIT from the music licensing business. So somewhere in that ballpark. And if I just cross out the maintenance spend and everything, so almost 600 crores of free cash flow. So I'm just like trying to think 2-3 years out, because since market also assumes that because they always start discounting the growth 2-3 years out in such companies to the present. So you have to think whether waiting for that journey makes sense or not. If 700 crore का suppose करते free cash flow करता है आज से 4 साल बाद, like sorry 700 crores का EBIT करता है, तो what's the market cap today? 10,000 crores, right?
Yeah.
So that's at almost a 13-14 times EBIT. But over there, from that point of view, now the industry has optionalities. Paid subscription starts, more things start, right? So then what can happen? कि वो जो 4-year का और runway है ना, then that becomes visible.
Yeah.
Then in that scenario, this is why Saregama makes a lot of sense to hold, in my opinion, right?
But I think the question is, let's say price doubles in the next 1 month, would we still want to hold? If it doubles again, would we still want to hold?
If it goes to sort of 20,000 crore market cap, I am getting out. I don't know about anything else.
Exactly.
Right.
So I completely agree with you that at this point, even for me, it makes sense to hold, but somewhere you have to draw the line, and it's slightly fuzzy, at least to me, where the line is.
It will be 100% of the times be fuzzy, because if it was visible, then everything will get re-rated to 150 to 200p.
Exactly.
All right. Thank you so much.
Okay, great. Akshay, so I think let's take the last question. So Akshay, I'm just basically you can ask your question. Any question that is left, please email us the question. So I'll also put a Google form. So I'll be after Sahil to answer those questions, right? So we'll get each and every question answered. So Akshay, I've given you the I think you can unmute your line if you want.
Yeah. Hi Ishmohit, hi Sahil. You guys are truly an inspiration. I'll start with the question. Recently, Malabar India and Ashish Kacholia ji have invested in a company known as Expro India. Do you have any views on that?
Yeah, thanks for the question. I have tried to study the company. I couldn't find what the competitive advantages are. They are, like you have mentioned, they are very smart investors and able investors. So definitely a good starting point. But if I can't understand, then I prefer not to own. I'm sure there is some advantage, but if I can't figure it out, then I'm not interested in owning. So of course, if they start doing con calls, if some fundamentals change, if I know more, then I might be able to give a better answer. But as of now, the only thing I know is that they make films for capacitors, basically, and I couldn't figure out what's the entry barrier there. Why can't anyone else come in and set up shop?
Okay. Okay, and there has been a massive capex, through webinars and recent tweets and all we have come to know. So, do you foresee any good, what we can say, growth for cement companies, or that sector is still under margin pressure or something like that?
Like maybe Ishmohit can answer that, because like I have no idea. I haven't studied any cement company.
Okay.
I haven't had like done an in-depth dive, but Dalmia Bharat is probably the one which looks to be very well poised. Because the thing with cement companies is you really want them when they're doing the geographical expansion or they're going pan-India, or you really want them when there's a regional player who's run extremely efficiently and the pricing of that region is going up. The EBITDA per ton realizations are going up. So I think Dalmia is at that stage where Sri Cement or Ultra Tech was 4 or 5 years ago, and we'll see an emergence of a pan India player. See, they're so smart with capital allocation that they bought the IEX stake, and they made almost a 6-bagger on IEX. They sold the stake, and now they're doing capacity expansion with that money. So this tells you how basically savvy the management is, because they could see that we are using the power exchange on a daily basis. And now if the largest stakeholder is selling, that should also give you an idea about the valuation, that why is he selling. So that is the one company you can look out for. For short term, I don't have a view on cement, because I don't have that much like grasp of the sector to tell you कि next 12 months में क्या हो सकता है, कहाँ पे pricing issue हो सकता है, कहाँ realizations ऊपर हो सकती है.
Okay, thanks a lot. And my third question would be that there are instruments in market known as InvITs. REIT, I'm not that comfortable with investing in commercial spaces, but there are InvITs like IndiGrid InvIT and Power Grid InvIT. Do you have any views on that? Because to be honest, I'm a commerce student and my conscience does not allow me to invest in fixed deposits. So doing a riskless part of thing, I feel somewhat comfortable with this. So any antithesis pointer on this?
Like to be honest, I haven't studied InvITs per se, but for me personally, the idea was, if I'm taking risk, I want growth. I want company to redeploy its capital and do that compounding. So I'm interested more in like growth companies. Whereas if I understand correctly, most of the InvITs will basically keep giving large dividends. So I haven't studied them.
Yeah, they grow as well. So IndiGrid, like my father had invested around at 84, and now it is around 150, and they have a good distribution of around 10% IRR as well. So this is just a, what we can say, substitute to fixed deposit. So still, if any antithesis pointers, so
that is a risky way to think, in my opinion, because it's a marketable security, which means at some point the market will be depressed and your risk-free thing can become risk wala, right? It can go from 150 to 30. It can, right? That's what a marketable security is. So at least I would not be comfortable putting my risk-free thing in a marketable security.
Okay.
Yeah, because that is, at least for me, that's any kind of emergency happens, that's what I can rely on.
Okay. And lastly, thanks for all the answers. And lastly, psychologically, like if a person has invested in something recently only Ishmohit had invested in Everest Canto cylinder, and I couldn't build up that conviction, so I didn't invest. Now the stock price has gone up around from 200 to 270. So how do you keep calm? Ki yaar, I got wrong and my conviction was wrong. And like you said, we did not enjoy that party every time, everywhere. So, but how to convince ourselves ki yaar, maine ye opportunity jaane di, and how do you do that?
See, the question is, are you like, I'll just invert the question to you. Like, are you investing in the price of the stock or in the business of the company? So that is one frame of mind to think about. And secondly, actually, let me tell you this: how long have you been investing for?
Around 8 months, 8 to 9 months.
8 months, right? I've lived through a bear market that was so bad that companies reported 25% earnings growth, stock used to fall by 5-10%.
Okay.
Right. So it's also the condition. It also depends upon the environment a lot. So we are currently in a very liquidity driven basically market, in my opinion. Just look at Balkrishna Industries, fell by 50% just on 2 quarters of bad earning. I think this happened in 2018. So these things happen. Saregama fell by 80% before the trend became extremely basically visible to all. So volatility will be there both on the upside and the downside. So you don't have to judge an action or judge a process on the basis of last 2 weeks of price performance, because I think bull market ऐसी है कि like I can say that for myself. So I know that there is a chore company. Now that price is up by 4x. So will I say कि मैं गलत था कि मैंने चोर कंपनी में डाला नहीं डाला? I think it's always the question between process and outcome. So I have to be oriented towards the process, and whatever the outcome is, it may be. But if you are process oriented, तो जैसे पोकर में बोलते हैं ना, over a long period of time, if you play your hands right over a long period of time, then you eventually end up winning. तो थोड़ा 4-5 साल के ओपिनियन में सोचना मुश्किल हो जाता है, because we are following prices daily or looking at stock prices daily. But I think that is not the right approach. It will give you a lot of agony because you're in the beginning, so you will experience the thing yourself. जो चीज मैं बोल सकता हूँ वो बोलने की रह जाती है, बट जब खुद एक्सपीरियंस आता है तो उसका एक मतलब डिफरेंट टाइप की लर्निंग रहती है. ठीक है, प्राइस ऊपर चला गया, इट इज इररिलेवेंट, राइट? स्टिल इफ यू वांट टू स्टडी द बिजनेस कि क्या हो सकता है उसके अंदर, लाइक कितना ग्रोथ हो सकता है. सो आई थिंक दोस थिंग्स मैटर अ लॉट.
Okay. Thanks a lot. Thanks, Sahil. Thanks, Ashmoy. Thanks a lot.
No worries. I think Sahil will take absolutely the last question from Charanjit, and then whatever questions are there, please send them to me on email. I'll get them answered by Sahil. I'll be after you, but definitely. Right. So last question by Charanjit. So yeah, you can ask your question. I think I have unmuted your line. Right.
Hello.
Hi.
Sahil, this question for you. You have disclosed your portfolio for quite some time. Your portfolio is available on public platforms. I would like to understand how you deal with the back pressure, which brings it, because it says on back pressure, how your portfolio performs. People keep on making comments or asking questions. How you deal with that back pressure?
Sorry, is the word you used back pressure?
Yes, back pressure in the sense then you make this thing, your portfolio public. Naturally, there is a public scrutiny, and it puts pressure on yourself.
That's the thing, right? Like we have to be very clear of like what we are doing, why we are doing. The thing is, investing is a thing which is very hands-on. You can't talk about investing without talking about the companies. Otherwise, it's just gyan, right? So the thing is, the purpose of sharing all these companies is to demonstrate the process. That's the purpose. Now, the thing is, if I share that and I don't share the fact that I've invested, then it's a bad practice on my part. For that reason, I have to tell that I'm invested or that I'm not invested. So I hope you see what I'm saying, right? That the purpose is to demonstrate the process. That's the purpose, so that people can get enthused to do the deep research themselves. If people are using it for any other purpose, that's regrettable and like not something that is intended at all. So at least to me, there's no pressure at all, because I'm just managing my own money, and I have told everyone many times that we can't and we shouldn't borrow conviction from anyone for anything, not for equity investing, not from me, not for medical advice, not from anyone else.
Great, thank you. That's it.
I think thank you to each and everyone for attending the session, and all the attendees who are there, can you just sort of write a super awesome session, or can you drop a fire emoji for Sahil, and can every one of us thank him for answering all the questions and sitting through patiently. Right, Sahil, you can check the comment section to Sahil. Right.
Yeah, thanks everyone, and thanks for having me, Shmuhit. I'm happy to share, and hope it was able to help people. I would urge them to look at the presentation again if they want to, and if they have any questions, happy to answer after the webinar also.
Thank you so much, everyone, and thank you, Sahil, for attending, for basically willing to present for SOIC. Thank you so much.
Thank you so much. Thank you.